Mhm.
under 6 figures. Am I kinda on am I, like, in the ballpark there? Or
Yes, yes, definitely. The example I was like, I was getting more into it earlier was in the just the simulation case where you're saving hours already. The next part will be in terms of training and deployment and all of that stuff, which you don't have to write manually. You don't have to worry about uh, making a small mistake in this, and then you have to redo the whole process, which is time and money wasted already. We manage that in the background. So, for example, after you build the simulation, you submit it, and we train the policy for you. You don't have to go and deploy yourself. You don't have to go source your own servers. All of that is managed by us for you, which is again like if you in one simulation scanning it from hours to minute, that definitely equate from months to weeks, basically. So yeah.
And
Gotcha.
to further hammer this in, you mentioned some traction you've gotten from World, from Boston Dynamics. I mean, these are major companies and AI labs.
Mhm.
Maybe talk to me a bit about who's showing interest in what you're building here, Sim Arena.
Yeah, so a lot of companies, like I mentioned, Boston Dynamics, World Labs, CRI, um, they're finding the utility of Sim Arena because it's accessible tool. So anyone can get started with Sim Arena, building simulation, training robots, and doing all of that in terms of data collection and fine tuning. And that's basically what they are doing and product they are providing too. So, for example, Sim Arena integrates seamlessly with World Labs. You're able to scan your room, for example, and generate a 3D environment with World Labs that you can train your robot in a visual way without having to do it by code or having to trial and error that you can mess up in. With Boston Dynamic, it was one of the workers there that were interested in this, and it's for them it's a training method for them and bringing in new users to them. Again, when a robotic company is going to deploy or send robots to a factory, they're not going to expect or ask the users to have special knowledge or deep technical knowledge. They want to provide them with the easiest way or easiest method to deploy, fine tune, or tweak the robot that they got. So that's where kind of Simarina falls into place. Another part is a lot of hackathon education platforms are interested in this because students and users that come in, it's easier for them to get started. Again, you don't have to install anything. You don't have to worry about the back end of things. You can just start it.
And what's the main use case for this, right? You scan your room, the robot now can train and test in this environment. Like, what's the end goal for this robot to be fully functional inside of a room to do what exactly?
Yeah, a room might be a small scale, but you can imagine you are in your store, for example, and you will have a special layout, and you have a special shelf that you want your robots to not touch them, for example. And this is an example here that's going on the screen. For example, you can say to the robot, if it's this is the path you need to navigate, and if you touch this part, you have less points. If you don't touch it, you have more points. And then you run that hundreds and thousands of times, and then the robot will learn that, okay, this is the path I should be taking, and I should not be touching this side of things. And this does not come with the robot from the factory. The robot has to be fine-tuned and trained on a special situation or a special environment that it's going to work in. And this is where, for example, Semarina comes in.
Yeah, you said you want to make this easy and accessible for like the World team, the Boston Dynamics team, people
Mhm.
that are doing hackathons, universities. Have you guys thought about like a white labeled product? Let's say OpenAI comes in, they say, look, we want our entire team to use this. We actually want to go and sell this solution to other people because we know where we're headed in terms of robotics. Are you guys thinking about white labeling this product, or maybe how are you guys monetizing? I guess is my question.
White labeling, I think it needs to be a very attractive offer because we can still sell what we have directly. We don't need to white label it. We can sell access to it. For monetization, the way it works is it's going to be basically through um, it's going to be a credit system basically. So the users can buy credit in Simarina, and that credit is going to be used for 3D generation, for training and inference time, and all of the related users in the platform itself. So that could be training, data collection, and also generation from scanning or agentic generations, because we haven't showcased this mode yet, but the idea is that you're able to have an agentic system that calls the sim arena and generate environment for you, so you don't even have to build them manually, and that will also be charged through credit.
Okay,
So
so credit.
essentially
Yeah, go ahead,
so
Sim.
essentially you guys are kind of the way I'm thinking about it is just like there's a vibe coding with AI,
Mhm.
like you're kind of
Yes.
creating this platform where you can like just basically vibe code but on the robotic side, you kind of have the simulation, you have the all the tooling, all
Mhm.
the server management, you have all they need to do literally is, as you mentioned, kind of pay for inference, pay for some of these costs,
Yeah.
and then you get access to the full suite of tools that you guys have. That's actually pretty insane. I've seen that a lot of kind of bigger robotics players, they've acknowledged codec, right? Like
Mhm.
obviously winning the pump fun hackathon, I'm sure was great validation for you guys. You guys have had a ton of validation even before then.
Mhm.
Other than like Boston Dynamics, I know you mentioned that one, and maybe even give the viewers an idea of how big Boston Dynamics is in the robotics sector. but any other big names reaching out to you guys? Any other names kind of like you guys are holding conversations with?
Not all I can mention, but like I said, there is Hugging Face, of course.
Nice.
We're close with them. A lot of the other simulation engines, we are in talk with them. Genesis, for example, it's a simulation engine that does the backend work for us, so we're partnering with them in that sense. Some there is Peak also is there. Some other names I cannot mention yet, but yeah, there is a lot of interest from not crypto native, but more robotic, more hardware related companies and products. One thing I wanted to mention is that simulation in the world of robotic is similar to how humans dream. So a lot of learning, even for human, happens in sleep and in dreams, and a lot of reasoning that humans do is also imagining what could happen in this situation, what could happen if I do this and if I do that. Simulation in robotics is similar in that value. So the reason why we added the agentic system to this, where an agent can prompt, is that you can have your agent running in your robot and connected to your robot, and then your agent is able to call SimArena and generate an environment to simulate a situation that it needs to solve, for example, and then it can train in there, and then the policy comes back to the robot, and the robot can execute that training. If you can imagine the flow, how it would be used by an agent or a robot.
Let's go down this rabbit hole real quick. How quickly can the agent do that? Can it run like hundreds of these scenarios in, I don't know, minutes, hours, or does it need to be like prompted to do that?
The idea is that what we have is a system where you're able to prompt the agent and provide it resources. So you can go in manually and start building the simulation environment by yourself, dragging things here and there and scanning the room and doing all of that. Or you can have your agent itself, like say OpenClaw or things like that. You can send it, this is a bunch of images that I want. This is my room. Can you use SimArena to generate an environment for me? And then the agent is able to talk with SimArena, generate and build the environment for it, and give it a link where the user can click the link and open the simulation environment directly in the browser. The situation I was explaining earlier about is the future vision for how things will work in simulation. But what we have right now is,
Yeah, no, can you do me a favor? Tell me how Fabrics ties into this, because you said it's like low latency, instant response for robots. So you have, SimArena. Obviously, we see simulations happening. It simulates all kinds of things, right? There's really no limit to this. How does Fabrics kind of play into your workshop for robotics here?
Yes, so the idea is that once a simulation is built, you can run it in the browser, of course, but then you will need to either collect data for it or train for it, and that's where Fabric comes in. Fabrics will try and source the closest and the cheapest GPU hardware, because most of simulations, they do need GPU compute to train them. So that's the job of Fabric. It will find the closest and the cheapest hardware that it can run the simulation on and ensure the lowest latency in terms of the training or even data collection. Some data collection, you need human intervention in between. So you need the human interacting with it, similar to a video game, for example. And if you're playing a video game from the US and the server in Europe, it's almost unplayable. The same thing happens with data collection. So you want where the simulation is happening and where you are as close as possible to you. And that's what Fabric does.
Got you. And this is yet to be released, correct? This is still in
yes. The cloud simulation side is going to be released next. Right now we have the builder. The user is able to build the simulation, collect data for it in the browser. But there are simulations where it's too heavy for the browser to run, where you need the cloud to start collecting these types of data.
Got you. So just to confirm, SimArena is live, and then Fabric is coming soon.
Yes, correct. I would say Fabric is live. It's just not public yet because SimArena is running on Fabric anyways. So yeah.
Got you. Can you talk me? And Chill, I know you got a question here in a sec. Can you talk me through the growth? How has the growth been in terms of people using and adopting SimArena?
So this is partly because we started doing the hackathon on PumpFun and building in public. A lot of, like I mentioned, hackathons, other hackathons are reaching out to start using SimArena in their hackathons because it is accessible and they have hundreds of users. They want to, they are getting started with robotic. They don't have the hardware. They don't need to install everything. So they can just go to the browser, start building there and training there. So these are mostly the partnerships that are happening right now in terms of SimArena. Other than that, we're trying to connect and collaborate with the other robotic projects because, again, removing the hard part of building simulations for any robotic project is a plus for them. It means more people using them, more people buying their hardware, and all of that.
That's awesome. So let's shift a bit here. We're looking at some forward-thinking thoughts. You have about 4 minutes left in the segment. You guys are building a ton. What you're already building has captured the attention of many in the traditional kind of robotic space, like not the crypto-centric space, but like in the real industry outside of our outside of these markets. Talk to us a little bit about what you're most excited about building. What's coming down the roadmap that could really be a game changer in terms of usefulness, going from 0 to 1, really propelling Kodak with the next step, and maybe even include how the Pump Fund Hackathon kind of gives you resources to get there.
Yeah, I think the thing that I'm most excited about right now is that there is a lot of shift towards, and I think over only the past month and few weeks, there is a lot of shift about starting to work towards optimizing the data sent to VLMs and VLAs and all of these models. And this goes back also to latency and goes back to video streaming and processing for robotic and other use cases. And these papers are being released by Microsoft, by NVIDIA, and things like that, which is what we've been working with and we've been working towards. So that means it's basically confirming our trajectory is that these AI models are going to need real-time inference very soon, either for robotic or other use cases. And we are in the best position to start serving that with the Fabric, the infrastructure, and all of the other libraries and SDKs that we have. So that's the most thing I'm excited about.
Well, can I ask, did Fabric come out of necessity? Like, was this something that you were getting requests and feedback from, say, Boston Dynamics, and you hear that this was an issue and you decided to build it out of necessity, or how did this come about? Just curious.
Fabric came before we got recognized or known by any of these companies. The idea for it was that initially what I was working on before all of this was gaming agents and video streaming agents. And those type of agents, they need real time and they need the lowest latency possible. And the only way to get that is through making sure that wherever your agent is running is as close as possible to the compute you're providing it. And that's where Fabric came from, is that it tried to aggregate and source between different providers and find the cheapest and the closest compute or hardware that the agent can use to achieve whichever task possible, either for robotic training or for video streaming and processing. And doing that in the lowest latency possible. Again, you can go back to playing a video game. If you're playing, I don't know, Apex in an EU server, and you are in the US, you're not going to be able to fight with anyone else. The same thing with your agent. If your agent is getting 200, 300 millisecond video, it's not going to be able to process it in real time. So there will be always those issues and delays. And the idea is here for Fabric is to provide these compute that will be 50 milliseconds, sub 100 milliseconds.
So for me, like, I know that you guys already have an amazing platform. I know you guys already have garnered a lot of attention. What I'm trying to also get an idea of is just how to think about the Pump Fund Hackathon. An idea that I had earlier on when I saw that you guys entered the hackathon, I'm like, dude, this is a guaranteed winner. I don't know, like I literally tweeted out about that when you guys first entered the hackathon, and I was really excited because they provide resources to you guys. Like, you know, obviously there's a cash investment there, but there's also a lot of levers that they can pull. They have access to a lot of big investors. So talk to us a little bit about, you know, as a Pump Fund Hackathon winner, what resources will you be able to kind of use that they provide, or how do you see that being a kind of driver for what you're doing at Kodak?
I don't think I can like disclose everything, but there is a lot of resources. Again, like you mentioned, it's not just about the monetary rewards that we're getting, which is being used already to get more developers, to get a marketing team built correctly. But beside that, there is a huge network that they are connecting us with in terms of other investors, other people connected either through crypto or for payment rails too, for the agents or the machines that are using Kodak itself. So that's where the value or the biggest value for us we're getting from them.
Jill, you may be muted, I think, if you had a follow-up to that.
I definitely am. I'm talking and no one is hearing me. Thanks for that, Dom. No, but as you guys are building out on Solana, how has the builder experience been? I mean, what kind of support are you getting from Solana? I mean, obviously, you're probably one of their standout robotics projects in the ecosystem. I don't think there's a lot of robotics projects out there in crypto, period. But how has the experience been building on Solana? What kind of support have you received from, you know, the team, the foundation?
Yeah, so we've been connected with the Solana team through many occasions and many interactions. Because again, for Solana, first is crypto and then the robotic side of things. But the main interaction point we had was through the X402 and the payment and the facilitators side of things. So that's and mostly it's technical development related stuff. But we have a lot of support too from them, from the super team here in UAE where I am. We got amazing access to their network and push from them too. And also another thing that we got is that when in Breakpoint we had a very good attendance in an event that we organized there, part of the Solana Breakpoint. So we do get very good receptions from Solana, and I wouldn't say we are the only one, but I think we are the most well-positioned robotic project in Solana right now.
And how are you guys using Solana outside of the token? Are you using the Solana network at all?
The Solana network and the token itself, in terms of token utility and payment for the whole product, is going, because if you go and try to find any other infrastructure product, usually how it works is that you pay with credit card, or you buy credit, or you have a big check that you write to the provider, AWS or any of these providers. But for us, we adopted the 402 from the start. So everything that is on Codec can be bought and interacted with the X402, and all of that is running through our facilitator that is on Solana. So that's where it comes from.
Got it. Man, I think that covers the questions for me. Let's check the community chat. Let's see if there's any questions. Crypto Jones has one. What about the token? What's its purpose? How does it accrue value? I think you might answer that a little bit.
Yeah, so this is basically what I was answering right now. So that's where the token comes in terms of payment, providing access to the compute, and the value accrual is going to be happening from all of the resources that are being used on the platform that goes back to the token.
Got it. Sounds good. All righty. Well, Moai, it's been an absolute pleasure here. I think I've gotten a lot of my questions in. Dom, if you have anything else, feel free.
Look up to some twit instead of looking up to Thomas Jefferson, or looking up to Nikola Tesla, or looking up to Magellan. I mean, kids, Magellan's a lot cooler than Justin Bieber. He circumnavigated with one ship the entire planet. He was killed by wild natives before they got back to Portugal. And when they got back, there was only...
But why?
22 million dollars in 3 fucking hours! There is no nobility in poverty. I have been a rich man and I have been a poor man, and I choose rich every fucking time. The real question is this: was all this legal? Absolutely fucking not.
Neither go towards the feeding grounds at the edge of the ice, nor return to the colony. Shortly afterwards, we saw him heading straight towards the mountains, some 70 kilometers away. Dr. Ainley explained that even if he caught him and brought him back to the colony, he would immediately head right back for the mountains. Why?
What's your dream? To go away.
To go away. That's right.
Do you guys want to drink? I don't understand why everybody has to be so judgmental. I understand why mom's judgmental. I think it's because she cares, partially. I think it's also partially because everyone else is looking at him like, hey, Cody's just a bum. Cody's this, Cody's that, Cody's this. Cody's me, bro. Let me be me.
All right, GM, I am back on stream.
What's
Dom,
up, boys?
buddy?
I'm still on stream, still here. We're
Still-
going hard.
Still here. It's been a little bit under the weather, but you know what? We're gonna make it work. So
Yeah, dude. Fun conversation. Again, kind of like this is like Solana ecosystem week. I feel like we're going hard in the paint with like cool stuff happening on Solana. Titan, they are like they're doing better numbers than Binance. They're super competitive. They're like splitting routers through their DEX aggregate. So it's gonna be a really cool conversation talking about Dart and kind of the new features surrounding that. I'm not a Titan user, like so this might convert me here. I want to learn more. Excited to hear more about this. It's just more so recently popped up on my radar. So yeah, interested to get into that one. And then Stable's coming back on. We have had the Stable team on before. Really interesting stuff. We've seen like cool experiments in the RWA sector, but never like home mortgages brought on chain and like how you can pay these down quicker using DeFi mechanisms. It's just wild stuff. Like that conversation is just crazy to think about in general. So exciting stuff. Exciting stuff. Nonetheless, we're just here staying strong through the bear market, potentially bear market being over.
well, let's talk about the taco. Because I wanted to cover this. Look at this gap on the SPY. Huge gap here. Also noting that this, as it did back here in May 2025, is starting to break above the moving averages here. I used the 50-day moving averages. And so we're seeing, I will be interested to see if this closes above this level. Obviously, Bitcoin kind of looking pretty good here, also breaking above this level. And this is starting to cross here, which is kind of interesting. So yeah, these are SMAs that, you know, who put me on these was Jones Rida from Left Curve DAO. So I have these pegged to the daily chart, not the hourly or any other time frame. They're pegged to the daily close. So nice to see this starting to break above. Now we have three candles, 3 daily closes above these areas. We tried here, but rejected. Tried again, and finally above. So maybe Solana rejected, but I would assume this also follows the rest of the market. My baby Hyperliquid, like you guys mentioned, $35. Okay, you can go back. When did we do this? Go back to the beginning of April. We talked about the Hyperliquid thesis, $35 pullback. The MCG Alpha account has this somewhere, but it is suspended, unfortunately. So we'll try and get that account back. But we did have a nice $35 call here, and that was made even back in March when this was in the 40s. So kudos to you. I don't know if it was you or Chill that called this entry.
Sorry, dude. Working on a quote tweet here. But no, that was more so Chill. I wanted a little lower actually than 35, but Hype's just looking friggin' fantastic.
Yeah. Also, the 50 moving averages here. It's got close to it, didn't touch it. But yeah, really liking my Hype trade. I am still long and strong Hype. Not going off that. One that, guys, I'm a huge fan of, Galaxy Digital GLXY. I brought it up earlier in the week. Maybe it was last week when this was like 17 or 18 bucks. It's getting the $21 treatment today, the nice 10% bounce. Again, I think the regulatory, this is AI compute, and crypto is the 3 main business model or business lines. But to me, one of the best executors or institutional players in all of crypto. So I think at $19 or $21 here, this is about a $10 billion market cap. And they've spun off, at times $500 million in revenue a quarter. So pretty legit company. And it's coming up against these 50-day moving averages. So anyways, seeing some life in the markets here. But, I will say there's still some uncertainty out there. The oil is still kind of pushing up. And I will mention, I was listening to, God forbid Mario Nawfal, but he's, he's based in Dubai. He has his ear to the ground in that area. He also, I think, speaks some of the language, Arabic and whatnot, because I think he is Arabic. So he has a little bit deeper understanding of the culture. And he was reading like messages from, different subgroups within Iraq. And, yesterday they were saying, oh, well, when the ceasefire news came out, they're like, well, we're not abiding by this. So I think just you got to be, careful here, because oil could definitely surge back up. So, yeah, I see that. That was me. Absolutely. This was chilled on the $35 hype pullback. There's $4 right there. $4 move. Again, back in April or in March, we did a stream and Crypto Jones said, what are your predictions? I said $50 to $60 hype by 60 days. So end of May. That would be April and May. So I'm still holding to that. I think this looks pretty good. Let's see. There were some tweets. I don't know if you have any macro, anything else to add, Dom. I know you're pretty passive on the trading these days.
Yeah, I mean, nothing to add here. I'm just taking a look now. Like I said, I gotta get that freaking tweet out. I'm trying to cook something up. Let's see. Crypto, you kind of covered. I'm looking at, NASDAQ, you kind of talked about. Let me see some stocks. I mean, Tesla hit that zone we talked about earlier. It's kind of bouncing off, but not too much to note there. Nope, gonna just defer back to you on this, but I'm pretty much good.
All right, so I think something else to keep in mind that we know that Solana is crushing it. And this tweet from MoonPay Commerce I thought was great, with I think $40 million single payment volume since its launch in October 2025. 88% of this volume comes from payments on Solana. So again, Solana seems to be a nice market leader on track. A nice call, Josh. Well, yeah, definitely have had. So if you go to my mint_Josh, go to my highlights. I have that February pin tweet for my Hyperliquid call, swapping all my ETH for hype, all of it for hype. And it's turned out to be great. That was at $27. So nice to have a win. But yeah, this look, 88%. This is, again, some of my thesis also for Solana is 88% of the payments volume having on Solana. I think that's pretty significant. I'll share this because I thought this was pretty funny. Introducing TikTok fee sharing on bags. Okay, pretty interesting. I think this is going to vamp some of the tokens. I saw Logjam, who is very famous for his penguin trade, from like 40K market cap to $130 million. Made a comment. You can't vamp TS. So I don't know what that means, but
this.
Yeah, you can't vamp this.
Yeah, dude. I don't know. This is rough, man. This is rough.
Yeah. Why rough? I want to hear your thoughts here.
Just pushing something no one really wants. It's just gonna further hurt the trenches. TikTok fee sharing. I mean, now we're gonna have 16 tokens launched for a project, and one of them is gonna be, okay, this meme was hilarious on TikTok. It's launched, it's doing well, and someone's like, oh well, they didn't direct fees to the owners. Someone's gonna come on and create another token on TikTok, and then route the fees, and this one's gonna get vamped, and everyone's gonna start going trading the one that's routing the fees to the creator, and the creators, again, not going to actually want to endorse this or talk about this. And if they do, they have no idea what they're getting into. Just a rough shake.
So the TikTokers are going to get hounded in their inbox, their comments, their replies, etc.
Did this just ruin TikTok?
This might have ruined TikTok. Nikita Beer, we're free and clear Nikita Beer out on TikTok, thankfully. So yeah. But is there not a world where this is at all helpful?
I mean, I don't see anything meaningful coming from TikTok is the issue. It's not like anyone's spinning up businesses. This is purely like memetics and attention driven trading, which I just I see zero value in whatsoever. But people are going to go where the market goes. And if there's volume to be made, I can see the approach from Bags on okay, capture the volume, make the money. So where people are trading, I'm not going to do it. But, if like, I don't think it's a bad move from Bags. They probably make money off of this, to be honest. It's just like kind of bearish trenches. But hey, honestly, for me, I don't care. Go ahead and trade all this shit to zero and bring the focus back to utility and the stuff that actually matters. Like, I mean, it doesn't really affect me whatsoever, to be honest. But
100K toppers.
yeah, that's the
100K
thing. Like,
toppers.
I don't know. And now it's like all the organic memes. Do organic memes even continue to run if like you can just share fees to other places? I don't know. Whatever. Don't care. Kind of bearish, I guess.
Crypto Jones says, I like it more than the trading terminal idea. I'm assuming that's the TikTok fee sharing.
Yeah. I mean, look, I think it'll make Bags money. I think, like, from an economic standpoint for the business, probably not a bad move. I think the trading terminal is actually not a bad move. What's your bearishness towards the trading terminal for Bags? Because I don't see that as a bearish move. I think if you're gonna have traders and you're gonna have a community, you might as well just drive them through there. It's kind of just like money on the table. Food on the table, bro. Got to eat. In my opinion.
Okay, here we go. Chill just sent a tweet that we're going to pull in here. Let's see. This is loading. Okay. So this tweet says, I'm proposing a token launch cooldown period for pump fund wallets that launch tokens. This would cut down on mass deployers launching multiple per day. A cooldown period of at least 24 hours. Yeah, I mean, I don't disagree, but I don't know how you do this. You'd have to do this at the platform level. Pump Fund would never do anything like this because they make a killing on all of this. Yeah, I mean, there you go. They are incentivized. Doubt it changes. I think the ultimate thing is here is you just stop trading some of these tokens. Like, don't trade on these tokens. Don't trade them. Stop going to the new launches section of Pump and sending money into those charts. They all are extractive. So, yeah. I think.
Here, real quick, Josh, did you see this, bro? Because I don't know, like, I see this, I don't know if it's real, it's from Watcher Guru, I don't know where's the quote of Trump saying this, but how do you feel about this, man? This is this seems like a pretty crazy thesis. I don't know. President Trump says U.S. and Iran may launch a joint venture to charge tolls in the Strait of Hormuz. I mean, is this serious? Do you think the U.S. would ever do something like this? I don't put it past Trump, but like,
it's capitalism, why not?
Capitalism. It's like, but how does the United States get to dip their toes in something like this?
I think at this point, any venture that brings these two countries together to be aligned with each other, and I know it sounds crazy, is not a bad take. Like, anything that can align these two countries. We need to end this war, and like, if people are making money and things are happening, like, why not?
I see some people throwing out the take like, okay, Donald Trump went to war to lose, like, on purpose to lose. And like, I can explain the reasoning behind this, but like, I don't think he ever would have done that on purpose. But if you do actually kind of look at this objectively, there is a lot of benefit for the United States to have the oil being restricted going through there, because we have plenty of oil in the United States, and we get plenty of oil from Canada. We get plenty of oil from Venezuela. Oil is not actually an issue for the United States. It's an issue for most of the other people, though, specifically China, right, who were trying to edge out in terms of, like, powerful nations. So I don't know. There is like kind of some, I'm not sure. Donald Trump definitely didn't have, I don't think, this idea going into it, but I think stepping back now, there is kind of an angle to saying, okay, if we close down the Strait of Hormuz and like, or start taking tolls from it to where we're profiting now, it weakens China quite a bit. And like, the United States kind of comes out just fine. Also, like, just more production starts coming to the United States for these reasons. But yeah, I don't know. Like, the more I've been looking into it, we, as the United States, are fine on oil, fine on oil reserves, fine on oil from bordering nations. So whatever. It's a weird thesis, but
I want to, I agree. interesting thesis. I think it would be great. I doubt the Iranians will do this, but
Yeah.
is what it is. I wanted to shout out either way. I know there was a tweet in there, and I know who Crypto Jones was talking about this name earlier, but they had some pretty good metrics. Let me pull up the tweet here. 319 users, 488 new apps created, 27 projects exported, 234 successful deployments. This looks like it's kind of like one of these vibe code, like quick launch platforms. And I just noticed this Soulflare tweet here, and it looks like they have a grant or prize like pool here to, I guess, build apps on either way. So you build something real quick and then it's live in minutes. So I don't know. Keep an eye on this token. Do you remember what the token? It was Ether was the token, right?
Right. And I remember there was some cloudiness about who's holding it, some early buyers, lots of fresh wallets in here. But we can cover this, I think, after the Titan segment, but it's kind of hovering around that same level now. But nonetheless, it is 12:30. It's our Titan segment now. Going to be a really, really exciting conversation. Again, wasn't super familiar with Titan before I started researching this, and they're very competitive in terms of their routing, their fees, and everything. And they kind of seem to be poised to take over quite a bit. So I don't know. Going to hear from the team. Going to get the whole scoop. Educate myself a little bit. But that being said, let's bring up Chris. Chris from Titan, my guy. How are you doing, bud?
Good. Thanks for having me here, guys.
Well, we appreciate you coming on. We've heard a lot of great things from Solana and everyone that's using you guys. The more I've started researching, you guys have been popping up on my feed. Just crazy stuff. I want to get the whole scoop. Can we get a bit more on you, though? Maybe some background, Chris, just who you are and how you came to Titan.
Yeah, I guess I'm the CEO and co-founder of Titan on that side. Before that, I guess my career path was mainly working at hedge funds. So US equities was my bread and butter back in the day. Transitioned over to crypto in 2018 when, there was no infrastructure for liquid funds. So I was building a lot of stuff like custodial systems, back office management, trading systems. And basically that kind of evolved to working on lots of routing systems, especially on the Ethereum side of things. And then when me and my co-founder took a look at Solana, we thought there was a really big opportunity open for another DEX aggregator to come into play on here. And that's how really Titan was formed.
What year was this?
Oh, so that was early 2024 on that side. Early 2024 was when we came out with the idea, did proof of concept. And then 2025, we launched private beta and it also went fully live in September of 2025.
Got you. What were some of the things you were seeing that the DEX aggregators weren't doing well? Were kind of it opened up this door for you to just jump in and be like, look, we need to fix this?
Yeah, there were two major things that we saw. So the first one is that we saw the best prices, in our opinion, weren't being found through existing solutions on that side. That's how we believe that the underlying mathematical approaches that other players were taking was just fundamentally wrong. It performed its job for a while, but for financial markets, you need a different type of algorithm. And I think that's really been proven out by our own router winning more than 80% of the time versus any other router on Solana right now. So that's one critical factor. The other one is that we want to reduce this quote to execution gap that we saw. Back then, quotes were being held for 10 seconds. Solana blocks move fast. It's every 400 milliseconds they update. So you're holding a quote for that long, then the user is basically just praying that they're landing a decent price. So we kept trying to reduce this. We did simulations at the last second for every single router to make sure that you get as close as you got as what you saw, right? And that's what really drove us to just launch Dart earlier this week with the on-chain routing. So basically the best prices are figured out right at execution time.
Is there look, I saw this tweet from yourself here. For example, it said, just saw a 7 pool split now. On-chain routing is truly here with BBO enforcement. Expect even more upgrades coming shortly. So this is one transaction split between, 7 of the best, I guess, routes to make this the cheapest, fastest transaction. What kind of goes into making this work behind the scenes?
Yeah. So I guess for this, it's a lot of optimizations that we do on chain in order to make sure that the quoting can all be fit on there because you are constrained by the limitations of Solana, right? In terms of how much compute units you have, in terms of like, I guess how many accounts you can fit in. So really trying to get that down and then working with the quoting logic, because for our off-chain router, which is Argos, the one that's performing extremely well right now, right? We have all this logic. We are basically formulating route morphology. So you can think of how a route is constructed. And then once that's constructed off-chain, everything is put on-chain on that side to be split to like, the best pools, the pools offering the best prices at that exact point in time. So you don't have to worry about, am I getting stale quotes? Am I getting a stale route? You place your trade in and it operates like a market order. It'll find that best prices across a wide variety of pools and market makers.
Yeah, this kind of seems like technical stuff on the back end. As for like user experience, though, I mean, what does that look like? You just log into the platform and execute a transaction. And it just goes and does all this stuff on the back end.
Yeah, exactly. So you think about like if I were to trade like a shares of Apple or Nvidia or Palantir, right? If you place a market order, you're not getting a fixed route. Like people aren't telling you you're absolutely trading through 100 shares of Apple through like NYSE, 300 shares through NASDAQ, 400 shares through like whatever random exchange will be out there. You aren't locked down. What happens there is that you send your market order and then there is a regulation that requires that your trade is split across the best prices across all these exchanges right when it lands. That's basically what's happening with Dart. Before that route, locking you to either like, let's say a NYSE or a NASDAQ, that was locked in. You couldn't change it even if the best price did change and which venue that you should execute on changed. So with this, a true market order is now live because all you have to do now is execute, and then we will figure out which right at execution time, which venues will actually provide you the best prices.
How does that work? Are you getting in contact with these venues? Like, do you have relationships with, I mean, here, I can pull up the tweet again of all the 3 different venues are routed through. Like, do you guys have relationships with ZeroFi, GoonFi, BisonFi, Humidify? I mean, because there's so many different, it seems like so many different venues that this can route through. Are you guys materializing? Like, how are you guys materializing that? Going and talking to each individual person, or I'm trying to understand how that works.
Yeah, so a DEX aggregator's job is to aggregate all the liquidity on Solana on that side. So we have more than 80 integrations already live in our current router on that side, right? So stuff going from Radia, Meteora, PumpSwap, PumpFun, all these prop AMMs like BisonFi, Humidify, and we just put that quoting logic all on chain, and then you rely on the routing algorithm to like distribute it to who is actually offering that best price.
Got you. Okay. Yeah, I don't want to jump too far ahead into like depth of this, but I do want to kind of walk it back in terms of, you mentioned you're a co-founder of this. You kind of gave us a bit of the history, but maybe let's walk through the timeline. So you guys spun up Titan. You saw a gap in the market. What does the team look like today? How many people are working on this?
Yeah, so we have around 15 people. 2/3 of the team is based around North America. The rest third is around Asia time. So nice global distribution. Basically, almost everybody on the team can code and is basically a dev on that side, myself included, although my CTO retired me from coding at this point. So
good. There you go. So you're doing more like just BD at this point?
BD, product, investments, partnerships, stuff like that.
Got you. The fool wearing a bunch of hats, which is exactly what you want to see from your co-founder. So really good, really good. You already explained a bit, but let's get a nice clean clip for everyone. What is Titan? Like, what is it? What do you guys are achieving here?
Yeah, so Titan itself is a meta aggregator. So when I say that, Titan aggregates a bunch of different routers, of which one of them is ours, right? So we get a bunch of different quotes from different routers, whether that's Jupyter's binary, whether that's OKX, whether that's 0x. And then we just route users to the best price without taking any fees. So users are always guaranteed the best price on that side. But in particular, what we are pretty confident on and what's unique to the Titan platform is our own proprietary router, whether that's Argos, which is our off-chain router, which has been winning like more than 80% of the time. So you are getting that better price. Or whether it's Dart, which was released on Monday, which is absolutely getting you better prices than, let's say, Binance VIP9, which you have to trade an insane amount of volume or have an insane amount of net worth on there. So it's really just democratizing trading for everybody, giving you the best prices everywhere on there.
Got you. I want to talk about Argos real quick because you mentioned this is actually off-chain, and I feel like what a lot of people see we're seeing now a big shift to just everything being on chain, from OKX to Binance to the centralized exchanges, kind of making this realization. So if Argos is off chain, kind of tell me the benefits of that.
Yeah, so I guess with off-chain, you can bring in a lot more data. You can do a lot more complex mathematical analysis on that side. But the drawbacks of off-chain is that you can't really make those decisions right at execution time. Everything turns into like probability games. Off-chain is still very important in order to handle that like insane amount of load, insane amount of pools, tokens that Solana needs to support, right? But the on-chain portion is really, that execution engine, that thing that actually finds you the best price, while the off-chain component really just finds you how you want to route, right? So like what pools are available for you to go through.
Okay, so now I want to dive into this because I understand it finds you the best pools, but when you actually start executing that this is where the execution can kind of vary and it becomes more of an estimation. Explain that side to me. So it's a bit of an estimation. You have your ideas, but what are the factors that can make this kind of vary?
Yeah, so like when we are relying on Argos in order to make the off-chain quote, we take a look at a lot of different factors. Anything from liquidity, the amount of liquidity the pool has, the quotes that it has, the sizing of the transaction in there, right? And then we send that over to the on-chain router. The on-chain router has a candidate amount of pools that it could select from, and then from that selection, it actually routes right at execution time who is actually providing the best price at that point in time. So you could think of it's like, I have a general idea of what I want to do. It's like, I want to go hiking, right? But I don't know which mountain is the best for me. Right at execution time, it figures out like, hey, it's sunny here, so you should actually go there instead, right? Instead of like going to a place that's avalanche, snowing, raining, something like that. We are actually finding that best. We know the path that we want to take. We just don't know which exact venue or which exact place we want to go yet.
Okay, so I'm completely tracking now. And so you figure this all out. You guys get these really good execution times, and like, how are you guys able to edge out someone like a Binance? I mean, you mentioned the Binance VIP 9 earlier, and I have that pulled up on the screen. How are you guys able to edge someone out with so much resourcing? Who's been in the market for so long?
Yeah, so I think this is a credit to Solana and the structure that Solana has built up, because basically you have these market makers, a lot of market makers that are quoting on Solana at very, very competitive prices. So without the fees, the fees that Binance charges both to market makers and to traders on that side, it allows the spread to narrow quite dramatically, right? And gets you better prices. What we're doing is we're consolidating all these market makers together and figuring out the best like distributions across these market makers. So whether that's let's say a Wintermute or like a Galaxy, for example, right? We'll figure out who is providing the best quotes, the best splits, and ultimately, without the restriction of a centralized entity, you are getting a better price freely trading on chain with no VIP status than a VIP status that's really only restricted to top level trading firms, because I don't think any individual can really get VIP 9.
Yeah, this is pretty insane. I think attributes a lot to Solana and just the power of the blockchain. Can you maybe walk us through why you choose Solana over maybe competitors, other L1s, other L2s? Like, why does this offer the best results specifically?
Yeah, first, I think, the technical structure of Solana, it goes fast. It's very, very conducive to composable transactions. That's the first thing. Nobody wants to pay $10 in transaction fees like how you're paying on Ethereum mainnet, right? Everybody wants very low transaction costs. Everybody wants it to be fast. And that sets up the prerequisites for a lot of market makers to come on board. With these market makers coming on board and quoting on your chain directly, this also attracts retail. And it's like, it's a self-reinforcing loop here. With more traders that want to trade because of how fast and how low cost it is, this brings on more market makers, and this brings on more liquidity, so that it helps even more traders on board. So I think Solana really has this unique loop going on. I think really it's only Solana, Hyperliquid that are really in the game for this trading space right now, because they both have this ecosystem of very popular trading and tokens, right? But they also have a lot of market makers that are quoting for it. And I do think Solana does have an edge here in how decentralized it is.
So I've seen you guys through, because I'm a Galaxy shareholder, and it came across the tape that they are an investor in Titan, but they also play a role, I believe, in the market making liquidity provision space. Can you just talk about where Galaxy or firms like Galaxy, what role they play versus you guys?
Yeah, so market makers like Galaxy is a market maker on that side. You have other guys like Intermediate market making. What the role they play is like they're the ones actually quoting the bid ask spread. You can think of it as like a citadel in the traditional space, quoting like Apple shares, right? Well, we are basically acting as an exchange and linking up traders and trades in order to link up with that market maker's liquidity. So we're finding who is offering the best quotes at that point in time.
Got it. And is this a shift? Because Galaxy wasn't necessarily doing on-chain stuff initially. They were more institutional kind of focus, but are they like, have you seen a shift of these guys now trading on-chain like completely? This is where they're making a good amount of their money, or is it still kind of, help white gloving institutions and doing ETFs and that kind of stuff?
Yeah, so I think on-chain is becoming more and more of a focus for a lot of these trading firms, right? Institutions included. They are seeing the benefits of it, and I think everybody wants to make sure that when this does pop up, that they have the experience to really take advantage of it. So we're seeing this from trading firms across the ecosystem. A Jump, I guess the Galaxy, the banks on that side, the U.S. banks like J.P. Morgan, they're all trying to like dip their fingers in and experimenting with what works. Galaxy in particular has been always pretty strong on-chain, so.
So I kind of got a question following on to this. We see all these institutions getting into it. I think we saw Hyperliquid did a really good job just like showing the value of 24/7 trading and the values that on-chain brings. When I ask you this question, where do you see kind of the puck heading in terms of institutions coming on chain? Do you think we see a financial world where these institutions see the value and start migrating over? And how long does that take?
No, definitely. I think everybody sees the value at this point, like the assets being quoted 24/7, being quoted by like a diverse amount of market makers and everybody accessing it at far lower cost because the back office systems to manage all these reconciliation things in the back end, those costs an obscene amount of dollars. If this all tracked on the blockchain, it's better for them. They don't have to handle all this infrastructure themselves. But I think the main blocker right now is you need regulatory approval for a lot of these things to come online. And I guess that was another reason why Dart has been so interesting, because basically this is one of the prerequisites for a regulator to be comfortable with more assets being on chain. That knowledge that when a trade goes through, whether it's a tokenized equity, let's say you're tokenized NVIDIA share or something like that, that whoever is trading it is actually getting the best price. This is a requirement in all US securities, and it's basically a requirement pretty much everywhere in the world. They need that guarantee, and Dart provides that guarantee. So hopefully with this, we get more and more regulatory approval, which brings more RWAs, more institutions, putting more and more of the assets on chain as well.
So yeah, we've been seeing this incredible meteoric rise of RWAs, like trading volume on Solana. But when you actually kind of zoom out, we still have a lot more institutional interest on an Ethereum side. Do you think that ends up coming to Solana over time? And like, how do you see that progressing?
Yeah, 100%. Because I think as institutional interest on Ethereum side to me has mostly been on the lending space, which is what can be easily brought over, right? Because you don't really have that much regulatory constraints on that front. The big win is you can bring full on trading on chain, because I think that's what blockchains are really, really optimized for. So if you can bring in like trading, you take over like equity shares, like whatever is in the S&P 500, Russell 3000, you bring them trading on chain 24/7, accessible anywhere in the world, so you don't have to wake up at like 9:30 a.m. and beat everybody else trying to execute your trades, right? I think that speaks a lot on like where we want to go.
Well, yeah, I think that's the bigger question too, is like, if you could put a number on it, you probably have all the statistics. Like, what is the total addressable market here in terms of like people coming on chain and on chain trading? Like, how big could this thing get? I guess is what I'm trying to figure out.
Yeah, to be honest, if we take a look at what crypto tokens actually are, you can look at FX pairs, right? They're basically currencies. So if you can bring on that monster of a currency market fully on chain, that is like trillions of dollars right there. You bring in equities, you bring in bonds. I think really any financial asset can be traded on chain and probably should be traded on chain, just given you save so much money on back office costs, you get so much more market efficiencies on that side. And there's a guarantee of the best price because everything can be traced back. So I really believe that the entire financial system can be brought on chain, and that is an absolutely staggering number.
Do you like have an idea how long you think it's going to take for us to get there?
On the security side, hoping like, within a couple of years, we just need approval and just some test pilots on that side. I guess for the rest, just have to outcompete them because right now everybody's kind of sitting comfy, right? There's no really disruption. But once you get that first regulatory approval, some assets are coming on chain, then people, the general public, will start seeing like, hey, I'm getting a better price on chain on Solana than like, on IZY. And then you start migrating people over pretty quickly. I think that's a key breaking moment. And I think, that's a moment that has a lot of our traders, like when they saw better prices than Binance, they just started moving over. I think same factor can start coming in here with equities, with currencies. So
Yeah, we see it happening. It feels like in real time on this channel. It's so clear to us. And I'm sure it's so clear to you guys that like this is the direction we're headed. And it's like you got to prepare for it. How are you guys kind of preparing for that and positioning for this inevitable future that we see so clearly? But not everyone's actually starting to put their foot in the door here.
yeah, so I guess again, so that's why we went with the on-chain router, because like basically what we see is that we are acting as Solana's exchange. We are acting as equivalent to like the NASDAQ on Solana, right? So just preparing and just being ready to make markets and to be able to facilitate trades, whether it's a tokenized equity, whether it's tokens, whether it's like currencies, whether it's like RWAs that are tied to housing prices, right? We are just going to be ready to facilitate the trade throughout the entire ecosystem.
Is there any limitation of what can and can't be traded through Titan?
No, as long as it's an SPL token on that side, whether it's token 2022 or standard, anything can really be traded, and that's why we focus a lot on like directly minting and redeeming primary markets, right? So yeah, technically you wouldn't be able to combine trading on primary and secondary markets in traditional in TradFi, but in crypto, Titan can actually find the best optimal split between you like getting IPO prices or IPO issuance along with secondary market trading. So if I mint a token, I can choose like 35% of that is directly minted on new tokens, and 65% of that I can actually figure out if it's better to buy it from directly from a DEX, right?
That's really fascinating. This might kind of answer the next question here from Crypto Jones. How is Titan setting itself apart from, say, Jupiter?
Yeah, so I think a couple things, right? So the first main thing is that we are acting as a meta aggregator. We are adding more and more routers throughout the system. Routers can specialize in different facts, right? They could specialize in meme coins, they could specialize in FX, they could specialize in the majors. We're just aggregating a lot of these guys and showing you clearly and transparently who is finding the better price and routing you to them. So that's one. The second one is that we are offering better prices, like with our proprietary router, more than 80% of the time, and we just expect that to keep increasing. Every basis point matters. If you think about it, 10 basis points may not seem like a lot, but you compound that by 100, that's like 10.5% of your portfolio right there. So that's a second factor. And a third factor, I believe, that separates out is this on-chain routing. No other player currently has this on-chain routing, so you always have this code to execution gap, which really makes you take quite a lot of slippage, and you aren't sure whether you're going to get the best prices. You may slip quite heavily, and that's why we believe that on-chain routing is the future, and it will probably start taking a look at full-on regulatory approval for more assets to come on-chain because of this feature.
Okay, so we covered Argos a little more in detail. Can we talk about Dart a bit more, just specifically kind of what that unlocks and what the thinking is behind this?
Yeah, so I guess with Dart specifically, right, it's a full-on chain router that when a trade is placed through there, it has a number of market makers that it can route through. And then, we can route these trades in like 5% splits currently, just based on the limitations of the chain. And right at execution time, it'll go search up every single one of these pools and determine who is offering the best prices at this point in time to form a combination of what is the maximum amount out that the user will get. So I guess that's Dart in a nutshell. It's just bringing that execution layer on chain at the last possible second.
So I guess the question is a little bit on like who's the user you're targeting here? Is this, I mean, it's obviously for everybody, but are you targeting retail right now? Are you having a lot of conversations with institutions and just like gauging their interest in something like this? Or what do those conversations look like?
Yeah, so I guess this type of product particularly is, helps retail the most, right? Because retail is the most affected. I think everybody's used to that Uniswap type of interface where you click swap, you take a couple seconds to go click approve on your wallet. a couple seconds is an eternity on Solana. It's not really on Ethereum. So like, this quote to execution gap exists. Your quote may have moved quite heavily. This product helps retail extensively, right, in order to make sure that they are actually getting the best price. The institutions are seeing or have a lot of interest in this as well, because any type of performance edge that they can get means more P&L on the bottom line, as well as that regulatory aspect. This is extremely interesting to them as well, because if they can convince the SEC that since DART is now online, that they actually can guarantee the best prices being offered to people who are trading their asset that they're issuing, then they can bring them fully on chain as well.
Are you guys doing any of that lobbying, or are you kind of leaving it up to other people?
I think we are in talks and just trying to help other people's lobbying efforts, because we built the system. We do see the benefits. We do understand how it fits into the regulatory landscape, but we don't have Washington D.C. Connections there.
No, absolutely makes a lot of sense. Super cool stuff. I kind of want to get over to like the economics of this business. And I think this is one that you're kind of in a growth market where it could just grow so exponentially. And that's what's really exciting about this. But how are you guys actually making revenue? Is it basis point spread, or what do the economics of the business kind of look like?
Yeah, so right now it's just full on wide distribution on that side. So just trying to grab as much market share as possible. And eventually, models that will turn up will be very similar to like how Robinhood and Citadel do it with like payment for order flow methods, and also specialized order types like limit orders, DCA orders, trigger orders. So those are all monetization options that we're taking a look at.
And how is your growth coming along? Obviously these like some of the routes that you're going through are really, really good, and you're offering better solutions than a lot of other people. Are you seeing steady growth? Is there somewhere we can kind of track that and look at that?
Yeah, no, growth has been massive. I guess you can see the Blockworks dashboards, you could see DeFi Llama stuff, right? All this is showing like, Titan's growing dramatically. Like we had a massive growth phase before 1010 when most of the liquidity dried up. So we're doing like pretty high amounts of volume, especially from the volume that's the most interesting. So, a lot of retail flow on that side. After 1010, I think volumes dropped across the board, but we are starting to pick up again quite heavily as more and more traders just get back in the game here. So like we are seeing pretty extensive growth. I think we are grabbing lots of market share and mind share within Solana.
I had to ask if you had a market outlook here. Starting to see growth. Do you think that translates to better asset prices, or just too uncertain with the geopolitics?
I think just too uncertain right now. And beyond that, I think there's also uncertainty in the US equity markets as well. So, crypto, we haven't seen an actual recession in 18 years, right? So I think people are just like waiting to see how that shakes out. But I think there's just too much uncertainty at this stage to call anything.
Yeah, makes a lot of sense. I guess lastly, I think I've covered most of this. Just really want to get an idea on the roadmap. What are you guys most focused on at the moment? You got DART out, seems to be very, very well received. People are loving this. What's kind of coming next for you guys?
Yeah, I think it's just more and more optimizations on DART is the first priority. So we do support a limited amount of token pairs because we just want to get this pushed out as quickly as possible. So adding full coverage of DART, adding more capabilities, adding more market makers on board. That's our first priority. The other one is just to like finalize the entire product suite for spot products. So, we have limit orders right now. We're going to be adding DCA and adding trigger orders. So stuff like trailing stop losses very, very soon. And then going to be making a full API push very shortly as well. So, just making sure that like we act as the exchange for Solana.
Yeah, I think within like 5 minutes, you can make a pretty compelling argument as to why everyone should be using, Titan over competitors. What's kind of your go to market with that? You have a better product. It's just like, how do we get this in people's hands, people using it?
Yeah, I think what's worked for us particularly is just like, word of mouth. I think that's where crypto is very, very strong at. So word of mouth to me also includes like, crypto Twitter on that side. We have a hardcore set of believers who believe in the product. They see the prices. And then if they just get one of their friends, one of their users that's trying out, they can immediately see the price differences. Like it's all visible on the UI. So you just open us up, you comparing against a competitor. I fully encourage you to trade at whoever is offering the best price, right? Because it's so easy. It's not like when I go to a brokerage, I got KYC, I got to take days to move my funds around. here in crypto, you just open up 2 tabs and whoever's giving you the best prices is execute on, right? Your funds aren't locked in. So I fully recommend you do that because we believe that Titan is offering you the best price the vast majority of the time there. So
I have
lots
a
of
friend.
that.
I have a friend who runs a trading firm, and they do a lot of volume. They use the APIs through like OKX and stuff like that. What's your pitch to systematic trading firms?
Yeah, so I guess the main one is that our API is a meta aggregate API. So not only do you get the OKX router or the Jupyter binary or the 0x1, right? You get all of them in one easy interface. You only have to integrate one player and you get access to all of these in a standardized interface for you to interact with. And more routers mean more possibilities of you finding the best price across them, right? And the other one is that most APIs, I'll say every API except from Titans right now, uses polling. So, it's technically is like called REST. So you just make a request, you get a return field back. We actually stream. Titan's API is the only one that has WebSockets, which means we stream the data to you in a continuous feed, which is a lot faster. And that's why a lot of trading firms, a lot of market makers are using our WebSocket API instead of anything else currently.
How are you guys thinking about integrations? Obviously, I feel like, man, you have this pitch and it's so powerful. I would love to just use my Phantom and be able to swap through Titan, or I would love to trade a token through, I don't know, a terminal, and it swaps through Titan. How are you guys thinking about integrations?
Yeah, so we actually we're going to be pushing that very heavily now because we made a couple of modifications to make it a lot easier to integrate with our API because it was really focused on hardcore trading shops before. We are actually like the guys powering Backpack in its entirety for the
nice.
wallet side of things. We also power a couple other platforms right now as well. So, but you'll see a far bigger push in the days ahead with just pushing out API integrations here.
That's really cool. I think it's kind of like you're the shadow player behind some of these protocols. So really, really fascinating stuff. I guess I'm pretty good on questions, but
we have to ask about. I'm assuming there's not a Titan token in the future, but you have Hyperliquid the token. A lot of these terminals likely to roll out token-based systems just to compete and to attract users, specifically retail users. But yeah, I don't know if you have any thoughts of that or any plans around that.
I guess not as right now. We do have like our entire legal setup ready for any type of token launch when the time is like appropriate, right? Just given the market environments right now, we just want to hold off until it is the most optimal time for everybody.
Well, Chris, I love this conversation. I think it's like a highly technical conversation, but you said it best. Like, hey, we're just pushing anyone to go to wherever the prices are the best, and obviously Titan seems to be that solution. So I think like that's the pitch, and really powerful stuff. We appreciate you coming on and sharing with us.
Yeah, thanks for having me, guys. So.
Of course, Chris. Peace.
See you.
All right. Well, that was Titan. Again, like, I feel like I just hadn't heard a lot about Titan, but it's very clear, at least based on that conversation, that it's powerful, extremely powerful.
Yeah, I don't know. It's not when traders place orders, they don't ever think about trade routing. They just see it goes through Meteor and different pools. But it makes sense that this is now like a thing. Obviously, even for tokens that are on PumpSwap, there's now Meteor pools with liquidity providers doing liquidity there. So there are these different venues. There's also these like GoonFi, ZeroFi, BisonFi. I've never even heard of these trading venues that I'm sure have their own kind of little liquidity pools set up. So yeah,
but it is wild to see one transaction split through 7 pools. Many different ones in there. Yeah, I don't know. I think just like they could make a serious push to be integrated into everything. They're fully like the backbone of Backpack, ironically. And I feel like they could be doing the same for Phantom, unless they have like a non-compete or something signed. But they could be doing the same for Phantom and all these trading terminals. But it seems like Chris is a really sharp guy. Like, seems like he knows this through and through, and he's addressed this market pretty well and found a gap. So cool. I don't know. I think I'll be using Titan. Definitely gonna give it a shot.
Gotta try it.
Yep. we got 15 minutes before we have Stable come on. And again, this is a pretty interesting conversation with Stable we got coming up because they're bringing mortgages on chain and kind of like doing something in DeFi we haven't really seen on Solana. In the meantime, we can just kind of shoot the shit a little bit. I got some interesting stuff. Let's talk about this from a MCG perspective. We saw TVPN just got acquired from OpenAI, probably for what I assume is like $300 million. But look at this, man. Here's some of the numbers. And I love Doomer Zoomer. I go through his stuff all the time, whoever it is. But look at this. Have you ever watched or listened to the Acquired podcast, Josh?
Nope. No, I
Boys,
haven't.
If you want a really good podcast, go and listen to Acquired. They basically break down the history of all these legendary businesses, Apple, Amazon, Costco. I listen religiously to every single one of their episodes because it's so great to listen to and like understand the stories behind it and the founders. Really great stuff. But man, look at the revenue, and I think it kind of goes back to the question here. Distribution is all that matters, especially today with like software being easier to build than ever in the past. But look at this. Acquired podcast ad revenue by year. In 2020, they did $200K in revenue. In 2021, they did $800K. 2022, 2.5 mil. Then for 2023, 5 mil, 8 mil, 12 mil. 2026, they've sold out their catalog for 16 million. It looks like they've already started to sell out the following years, with 2027 being sold out for 18 million, 2028 being sold out for 25 million, 2029 being sold out for 38 million. And kind of the kicker of the whole thing is they're doing 8 episodes a year, right? So
that's crazy.
8 episodes, super focused, takes them like a month plus to produce. And in those 8 episodes, they're squeezing $38 million out of these sponsors. And like, it goes back again to like the quality of the viewer is much more important than the quantity of the viewer. I'm sure they have really great numbers. I think they're a top podcast. But still, like $38 million for 8 episodes. Clearly their audience is like extremely, extremely valuable.
Go down a little bit here. I'm just trying to see this. So they just in like Notion or something have a okay, very cool. They've productized this beautifully. Send me this. I think I got some inspiration here for
let's go
productizing some of these offerings.
Well, and that's
yeah, I mean, like in reality, OpenAI didn't buy out TBPN to like buy a podcast. They bought it out to I don't know, create an AI media thing, and they needed to train that on something. Like, I feel like there's just a bigger angle to.
I don't think that's the play at all. I just think now, yeah, you're right. They're not monetizing it. They took a 30 million.
You think they're not going to do anything? They're just buying it for the revenue.
No, I don't think they're buying it for the revenue, but I don't think they're going to train up AI off that. I like at all. I know they got the guys, Jordy and John, like helping do some advisory work, but I don't really know the angle. Of course, promotion for OpenAI, and I think like great distribution for OpenAI whenever they need it, and they know the value of that distribution. But also like the pipeline that John and Jordy have at TBPN is like no other. So I think OpenAI sees the value in the pipeline. I think OpenAI sees the value in John and Jordy, and I think OpenAI sees the value in like the distribution so they have to the right people. So if they need something pushed from OpenAI standpoint, John and Jordy can go and push it, and maybe it's only 1,000, 5,000 people, whatever, watching. But 500 of those are C-suite executives, and 500 of those are AI labs, and it's like it's reaching the right people. I think that was kind of the angle for OpenAI, because again, someone did the math on this. Like the average TVPN viewer is probably over like $50 million per viewer, and like the idea was, well, you got to think if Mark Zuckerberg is watching this, and some of these other tech billionaires are watching this. Sure, it's only 5,000 viewers, but like the average of each of those viewers' net worth is so high that one deal done from an episode kind of covers, now if they spent 300 million, it doesn't cover 300 million, but it covers a piece of that. So I think that's kind of the thinking there.
No, that's definitely a reasonable take. Man, SMCF is $2 million. Holy. Guys, this guy was on MCG at 150K. Oh my goodness.
Let's see.
Look at this chart, guys. Oh my goodness. I cannot believe this thing is ripped so hard.
I didn't even realize it was going this crazy. What? Crypto Jones might be an opportunity for MCG to get an OpenAI competitor.
I'd love Grok to sponsor. That'd be great. GM Top
GM.
Fumbler.
My guys. Yeah, look, I think Crypto Jones, maybe it's not an OpenAI competitor, right? Because I think we're kind of in a different niche than just like tech in general. It's more crypto, but I think it goes into the broader thesis of, there's probably a crypto exchange that it'd be very valuable for them to get their hands on, ownership over MCG, because I think we do kind of disseminate into these information pockets where distribution is the number one moat, especially the quality of viewers. And if, an OKX or a Binance or a Coinbase could own a podcast, I see them doing that. I think we see Robinhood make these acquisitions. I think we see a lot of these centralized exchanges make these acquisitions. So maybe not a competitor to OpenAI specifically for MCG, but like definitely a crypto exchange or, a top crypto protocol like Solana. It's kind of the same idea, just different niche. And it shows the value of like being highly specific and like having a highly specific niche, but controlling all the mind share and all the value there is like much more valuable than someone that's got a super broad audience like Mr. Beast. So yeah, you are, Abe.
I'm a quality viewer. Yeah, you are, Abe. Absolutely. You all are quality viewers.
The thing about MCG's viewership is it's actionable investors. Like everyone listening for the most part is ready to take action on anything they hear on the show, right? At SMCF, for example, you heard SMCF, you heard about it, you watched the interview
2nd.
down here, April 2nd. I mean, I'm not sure how many of our viewers got into it, but no one was really talking about this. Very well, a lot of these people went and took action on this, right? And so like I think that's kind of the thesis here. If we can showcase a crypto product that's quality, or showcase a company that's quality, it'll get the attention it needs. So I don't know, it's all about finding the right fit, but I do see us heading in that direction, or I see like the industry heading in that direction for sure. For sure. We love you boys, though. You're all quality viewers. That's great. Yeah, Chill. Shout out Chill covering this one by himself. Solo streamed SMCF and it crushed, but that's an incredible chart. Honestly, we should probably get more content out on this from this stream, because super good stuff.
I saw a Game too. Game had a position in this and then sold it right before it ripped. So I think there's some max pain around on this one.
Well, what are you going to do? Controversial,
some sort of approval score. What is that? What do we mean by this?
In like we have all these found. For example, Dart just came on, and we look at Dart. We looked at the interview and we're like, oh man, that looks really great. I think I could see them out competing Jupiter. I could see them out competing Phantom, Phantom or whatever. Approval score 9 out of 10. I think is what he's talking about. It would be kind of cool to have a website with a little stamp on each interview with like how we rate it. Although might disincentivize some people with shit projects to come on, but honestly, that's fine by us, I guess. Yeah.
No, it is fine by us. I can't believe this is just ripped. I'm having a bit of
sideline remorse here.
Yeah. Let's see. Okay, here's a tweet from Chill that he just sent us. Let's pull this up. Do you see it in the chat there?
Yeah, sure. I got you. All right. What's Chill have to say on this?
April 8th, this tweet was posted.
John, Crypto God John. He said, my quant has informed me my target on SMCF are too small. Using Y Combinator tooling for its AI factory. Y Combinator back Coinbase, Airbnb, Stripe from day one, just added to my bag heavily. Did YC back this? SMCF might not be 100x, but a freaking 500x. Check this out. OX SMC factory G-Stack is factory engineer. The G-Stack context materially strengthens the case study for SMCF. I don't know what like a G-Stack is, to be honest. G-Stack as factory engineer. Gary Tan's YCCO battle tested Claude Code framework. I'm not quite sure what I'm looking at here. It looks like Crypto God John liked this. He's a very big name. Yeah, look at that. 866K followers. Jeez. How many views did this get? 36K views. A lot of likes. I like it too. I just don't know what this means. SMCF might not be a 100x, but a freaking 500x. Check this out. G-Stack as factory engine. Gary Tan's battle tested Claude Code framework. 23 specialist roles invoked dynamically. The same troll. 600K lines of code. 60. I guess this is kind of talking about the guts of SMCF. So I
wonder,
don't know.
like, I wonder in these. So I wonder what's going to happen with some of these. Like, I put like SMCF, Juno, GSD. You know, these builders that have these on-chain tokens that are just kind of hacking away. Like, at when is there a point in the market where these things start performing just on, you know, like, oh look, I can't set up my Claude Code agent, so I'm just gonna invest in this. Then hopefully, you know, save myself from the underclass.
Okay,
Are we getting that to that point? So
the GStack context materially strengthens the case study for us. This is not just a framework choice; it's an evidence of the operation technical judgment. Choosing the production validated tooling of Y Combinator CEO, who's back Coinbase. Okay, so it's like the foundation, yeah. So kind of like the guts. The verdict structure remains the same, but the gap widens. SMCF is the higher ceiling, longer horizon bet with a stronger technical foundation. The factory thesis: autonomously discover, validating, and shipping products using battle-tested YC grade tooling is now more credible. Not the
very interesting. So are they like, is what's happening here is, and I don't know what Nick's relationship with Gary is, but he's basically taken the toolings and learnings and training from YC and then incorporated that into this factory launchpad, I guess.
Yeah, it seems something like this. It is evident of the operator's technical judgment choosing the production validated tooling of Y Combinator CEO, who has back. Okay, so it's production validated tooling. I think I gotta dig a bit deeper into this, but yeah, it's crazy. That's crazy. That thing has ran like crazy since being on the show, and the market's been terrible. I completely missed the boat as well, so I'm with you, Josh, on that.
Hopefully, you guys got some of this.
Some of this upside.
Yeah, some of this upside. Honestly, I don't think. Who do we have on? Oh, Stable. Yeah, that's right.
Yep.
Let's see. All right, I'll check. Yeah, I can ping him.
Yep. Okay. Yeah, but Winston, I think he knows the time he should be on any second now.
Yeah.
Nonetheless, cool stuff. Stable, guys, for those that don't know, it is here. And I'll just tab over here so you guys can see. And I'll even actually, the website was really good if I remember correctly. Let's see. Our stack brings the U.S. mortgage market on chain from an origination through delivery. USDX, the mortgage-backed stablecoin, enables anyone to provide liquidity. We've already had them on. I think we're going to talk about this again, though, just because it's such an interesting concept. The first time we've seen like mortgages come on chain, it's just like kind of a crazy concept for RWA in general. So having Winston back on to just break it all down again for us and explain some of his thinking is always good to have. So speaking of, I think he's in the waiting room and we can pull him up right now and just get straight into it if you boys are ready. All right.
Send it.
Winston, welcome back. How are you doing?
My live? Oh, it's been a hectic day, but I'm so happy to be here.
Yeah,
How's
dude.
everybody?
We're doing good. Last time we talked to you, I was like fascinated by this concept, and only since we talked, RWA has just felt like it's been skyrocketing through the roof, and getting so much mainstream adoption. I keep saying this, but I attribute it so much to like Hyperliquid, and I feel like all the traders and institutions, realizing that 24/7 markets and typically liquid markets are like insanely powerful. And then you come around with mortgages on chain, which is just so left field. And it's like, okay, wait a minute. How can we bring this market onto Solana and like offer DeFi mechanisms to this is kind of crazy. So excited to get back into it and just like highlight some of this stuff again. But Winston, let's start where we did last time. Introduction of yourself, get to know you better.
Yeah, great. And thanks so much for having me on. Again, I'm very happy to be here. Very happy to see everybody smiling. Love the flag. What's with the Canadian one though? No, just a joke.
Well, I'm Canadian, so I gotta mix.
I know, but what's with the Canadian? No, I'm joking.
Like I'm a patriot too, so
great.
It's all right.
He's repping them both.
I'm repping them both. Hedging my bets. No, I'm kidding.
Great. Yeah, well, you got to sometimes, that's what we're pretty good at that. So,
Yeah.
anyways, I'm Winston. I'm the founder of Stable. Stable is an incredibly simple product, really simple project that I think I hope becomes like a base layer for what you do with RWAs on chain. Essentially, what we do is we turn real estate equity into liquidity. And that could mean 1,000 different things because there's already several hundred different products built on top of that. They all exist in TradFi. We specialize in the US market right now. And a very simple way to paraphrase everything that I just said is we're bringing the mortgage market on chain. And so that exists at the origination level. It exists at the securities level. There's sort of this whole plumbing and pipelines to it. And that hasn't been updated in a really, really, really long time. Most technology providers in the space right now are focused on largely anti-fraud stuff, security encryption stuff, analytics, because over the past, 30, 40 years, ETFs and other things that provide data or that rely on having the best data have really blown up. And what we're doing is we're going to come in and just make the plumbing better. So I guess we're the plumbers of mortgages, and Solana is our sewer system.
Let's go.
But,
Plumbers and mortgages and Solana's a sewer system. Love it.
Yeah, and so we're basically putting in a better sewer system because the other one's bad. And it was great for its time, but think about it this way. The way that a current MBS works, like let's say you're working with the QM, you're in the QM space, you're in the Fannie Freddie government mortgage space, you could say. And I'll try to cut all the lingo, but somebody's written you a loan. They've borrowed money to do it. They are then going to sell that loan, which requires it to go through all of these reviews, which requires a lot of people sending PDFs back and forth. And just for context on that, we just switched to a new data provider for a few different things, mostly property data. And they sent me 2 Excel spreadsheets. I have a Mac. And so, that's just like the baseline of the industry right now. It's a lot of people sending paper documents back and forth. And so that was what it was for its time. They then have to transfer money. So somebody has to lend them the money. They then have to lend you the money. They then have to sell the mortgage. That person's probably going to need to borrow money. That days and days and days and days and days. And they're going to package it up. That takes days and days and days. And on blockchain, that could all happen 1 or 2 transactions. And so, Solanaverse, you're talking less than a second for all of that. And that's essentially the efficiency we're trying to bring. And then the way that we believe to break into it is to offer a better product. Like I said, this liquidity layer exists in TradFi, and there's lots of different products. Each mortgage is a product. Each type of mortgage is a product. And so what we've created is this thing called a home equity account. I think you guys may have been the first podcast that I talked about it on. They're going live now. So that's big.
Nice.
That's we're actually issuing loans on chain. We can get into that in a minute. And those loans are essentially against the property equity. They're going into a yield positive strategy. So say the loan is at 6%, this person needs to earn 8%. Those payments, that spread, that 2% spread, then goes back towards their existing loan, or if they don't have a loan, it's just money in the bank. And so you're basically performing, a carry trade to an extent against property. And what we want to do is enable everybody to do that and make it the default thing, because right now there's a lot of people going after that illiquid asset, if you will, that secondary home equity, and the size of that market has grown to more than double, almost triple the size of the mortgage market. And so if you're talking about home equity that's just sitting there, it's 3 times as much as mortgages. And there's people trying to buy it, people trying to trade it, people trying to sell it, people trying to get you to take out a cash out refi, and none of those products have really hit at the scale. And so we hope this can. That was a long-winded answer, but
well, it's this is just a very entrenched legacy business that's been around forever. I don't think anyone's really tried to do it differently. So in simple terms, could you just tell us why the heck do mortgages belong on Solana on the blockchain?
Yeah, speed means money. And so if you can complete the process faster in a more verifiable way, where you don't have to second guess, did this person just send me a fake PDF? Because right now in the state of mortgages, somebody could just send you a fake PDF. And it's somebody you've been doing business with for 20 years, you're not going to second guess it. Turns out they just screwed you for $300 million, right?
The mortgage process is ridiculous. So I have some insight here because I actually have a mortgage and I actually have good equity in my home because I bought it at the right time. But like the process is like you go to your bank, you then you go to your mortgage broker to start. They do a check. Okay, what's your income? All this kind of stuff. They qualify you for the amount. Then you get the mortgage, and then someone comes to your house and like make sure that you're not fraudulent. At first, you do a phone call, and then someone comes to your house. You sign like 3 versions of files. So like you have a version, the bank has a version, and then a third party, I don't know, mediator has a version. And it's just like, it's a really, really inefficient system. Now, what I understand of you going after the refi market or like kind of the home equity line, I think is really smart because essentially you're loaning people money. So like in my terms, like if I wanted to make a big purchase, let's say I wanted to buy a car, which is terrible use of this capital, but like
spending money is always good.
I could loan against the unused equity. So how this works is like if I paid $800K for my house, or I have a mortgage of $800K for my house, and my house is worth $1 million, I have $200K of equity, and I can basically go to a lender and borrow against that. So let's say they won't let me do 100% loan to value, but maybe they'll let me go from 80 to 85%. So I'm pulling out 50 grand out of my equity. Am I going to a platform like yours as a mortgage holder and pulling out that 50K and then paying, whatever 6 or 7% interest rate? Like, I don't know, I said a lot there, but do I understand?
You have a great understanding of it, by the way. That's a phenomenal example. And great to know you're a millionaire. But
no, I'm not a millionaire. The bank owns a good chunk of it, but yeah.
No, I was just taking the example of the numbers you threw out. But yeah, we can play with that example. Let's stick with that exactly. And great identification of being the cash out refi, HELOC, whichever way you want to think about it. And that 85% is a really relevant number. And so we'll stick with those numbers. We'll say it's the 85% thing. What you would do through a platform like us is you don't have to do that before you get to us. We onboard other brokers and they will do that for you within the platform, essentially. And you don't have to really think about it. And the way the platform is currently set up is like, you don't ever even have to touch the money. Like, it's just like like the onboarding is a bit, you have to give us a lot of documents, but based on how the world works, you probably already have all of the documents and they're probably sitting in one of the apps on your phone. If not, it's at one of your bank logins. Download those, transfer those over. We then, we assume everybody's a great person, but we then go double verify everything you give us through a few different APIs and then cross-check it in a few different ways. And then pull a few different appraisals of the house. And we essentially we then have a good understanding of what is that 85% threshold, where are you at, what does it look like on a regular basis. And then we identify, we can talk about how this will look at scale. We identify different strategies, or different strategies are offered through our platform. And perhaps that platform becomes, a Keen, or even like logging into Fidelity. Maybe Fidelity one day integrates us or something like that. And they have then these 3 products, and one earns 15% and it's higher risk, one earns 12%, it's medium risk, one earns 10%, and it's very low risk. It's like a credit equivalent, let's say.
So I'm taking the equity, converting it to liquidity on chain, which is then earning yield. And what am I using that yield for? Like, am I using that yield to pay down the rest of my mortgage?
That's the first use case and the most simple use case and the default use case, yes. But theoretically, it could be anything. It could be paying your electricity bill. It could be paying your taxes. At some point, with some of the properties that we're starting to get deposited, these people have lower interest rates and they have so much home equity at this point that we might just actually be able to make their whole mortgage payment just on the yield, which is insane to think about, but it's a math problem, right? And so right now, yes, it's all going towards your first mortgage. If you don't have one, it's just accumulating. And then in time, we'll diversify what you could use it for. I mean, it's not exactly hidden alpha. There obviously one day could be a card tied to this, where it's either a debit card or a credit card, where it's like, okay, well, you have this yield. It's just sitting there. If you're not going to apply it to your mortgage, or you don't want to apply it to the mortgage, or maybe you just need $1,000 you can then swipe this card, and so that becomes like a way that obviously you could spend it on anything. But yeah, right now
And
it's
am
all
I
going
paying
towards
back
the mortgage.
the line of credit? Like, am I making monthly payments in the line of credit, or does the yield, can I direct the yield to it? Like, what's the
Yes, right now the yield directs directly to it, and so it's automated. Agentic finance is a hell of a drug, and so that it's all automated right now.
Got it. All right, go ahead, Dom. I've talked enough.
Yeah, no, I think this is crazy stuff, and I'm trying to like piece it all together. And I think you asked some great questions, Josh. So yeah, you got this yield paying off your mortgage or paying for other things that you need. Like the big question just becomes, when does this shift happen? Because it makes a lot of sense to do it this way. And you mentioned like we're redoing the plumbing for everything, but like what kind of has to happen? And we asked this to our last guest, but like what domino needs to kind of fall where we start seeing people be like, okay, it's clicking, I need to start doing this.
You're talking like at a social level.
I mean, like, look, well, I guess I can ask you, how's your,
how do you get your first users? Yeah. Cause like, again, it's,
we have our first users.
Talk about that.
I don't know
let's hear it.
I don't know if you can share a tweet about us issuing the first mortgage on Solana, but that was actually through a home equity account. So that was a lien. I think it was $114,000, and like that's a real mortgage. And so like that's an NFT that's now sitting on chain. We have, if you find the tweet where we did it, we linked the transaction actually below it. And so we found our first users, but I think the real thing we're dealing with right now is we are talking to our customer's customer. And so we're talking to like individuals, perhaps even fund managers, but really we should be talking to their mortgage broker. And so then they can distribute the product or their bank, whichever one, or even perhaps their wealth advisor or their CFO or something like that, where they can distribute this more at scale. And so I'd say there's a few ways to answer the question that you asked. I think that's a phenomenal question. I think I'm going to choose to address it as like what needs to happen socially, where like, okay, well, we've gotten our first couple users. Based on that, I assume we can then scale into at least a couple broker partners. Then they're getting us users. What has to happen for this to be the thing that your dad won't shut up about at the neighborhood barbecue?
Right.
And I think for that, there's a few things. One, there's a few things on our / my end, and a few things I guess socially. Time is the biggest one, and so just like it being a trusted process, like the people who are already deploying into this, maybe they're going out and telling their friends, hey, I'm trying this new thing, or maybe they're just like, I did this thing, I'm gonna see how it goes. But if they've been doing it for a couple of years and it's starting to make their mortgage payment, you bet your ass they're gonna brag to it about somebody. And then that person goes and mentions it to somebody else. And that's where we're in this is a crazy idea phase. But then more and more people start doing it and sort of becomes,
and
I think
the boomer generation has a lot of equity in their homes now. So much equity. Yes. So who's the lender of the stable coins who's the lender of the stable coins? Like who's buying these loans, I guess, that are backed by other people's equity?
Yeah. And so there's a fascinating thing. There's a few ways to answer that. I'll go through each and we can elaborate on whichever one you like. There's retail. You can do that just by holding our stablecoin. So just swapping into USDX, you are the liquidity provider. The second one would be like a proper mortgage company who has warehouse lines or other liquidation pipelines. And the third would be a securities issuer who's going to acquire or underwrite, a basket of these things, then either include it as part of their securities offering or create a new security out of these. That's the three different directions. And then we do have a little bit of prop capital. We are playing sort of as the first and second, where I'm not 100% certain whether the NFT / security side will scale or the stablecoin side will scale. I would like to see the stablecoin side scale. I think that's the best way to do it. I think it's the more lasting way to do it. And I think it could actually solve some problems that do exist on the other side. And so really, like if you went and swapped on Jupiter right now for USDX, you are the liquidity provider. And so I think that's really cool.
Interesting. Can you walk me through a bit on like the yield side here? I got this pulled up, but you mentioned the different, 30-year, 15-year, 4-week. How are you guys actually earning yields from the equity that someone's borrowing against?
Yeah. And so it's literally a loan. Like it's a mortgage. It's I guess now the way it's currently issued, but yeah, it's a mortgage. And so let's say somebody swapped in more or went and minted more USDX than we have loans outstanding. We would play in the secondary loan market or in the warehouse line market to provide that liquidity to other brokers or acquire loans that they've written. And then if it's loans that we've written, there's the yield tied back to it where they're actually making payments. And so the way that it works right now is we're taking that, we're only deploying it to yield positive strategies. So it's a weird technical thing. Like technically right now, the smart contract is the lender. That is the lender. And so the smart contract then sees like, this is the yield I need to get back. We've deployed it into this. I then have to take this minus fees, and then whatever's left over is the spread that goes back to the user. Does that answer your question?
No, yeah, it totally does.
Okay.
I'm gonna jump back over to this right here. You put out this tweet. We just issued the first ever blockchain native mortgage on Solana. How did you guys make this happen? What did that process look like?
A lot of phone calls. a lot of phone calls. And so essentially what a mortgage comes down to in the US, the way the US works, and each country has different rules, and Canada is actually a fascinating system that we can talk about in a separate time. But in the US, you need what's called a deed of trust. And you essentially do that. It's an agreement. It goes through like a lot of terms, and in traditional mortgages, they can be quite long when you talk about all the different documents that are involved. But the main one you need is the dot. And that's where you're actually filing the lien. You then sign that with the homeowner or whoever has authority to sign it on the home. And then you have to file it with the county. And so essentially that part of it is off chain, but the representation of the ownership of the asset, the payments, the amortization, like the actual plumbing of the loan is all through that NFT. And so that's what it was originally designed, we probably wrote the original code over a year ago, maybe longer. It was EVM, now it's SVM, but the ability to actually process all the payments and go through all of that is just like it's a fascinating NFT is what it is. And so it has all of these different track records. There's payments that are due at certain times. There's penalties that happen if payments aren't made. And so you really have to compress all of that into like the base core logic, and you put that into a smart contract, which then mints an NFT and represents it as the NFT. And then the formal legal agreement is off chain.
And why choose Solana? Like, why do mortgages belong on Solana rather than competitors?
Let me think about that. I would say Solana's sexy. Like that's got to be the easiest answer for sure. I think the speed and focus of the Solana team. Solana operates almost like a business. I mean, they're a foundation set up, but like they have clear objectives. Agentic finance, payments are two things that they're pursuing right now. Those align with our narrative. We see them pushing that pretty hard. We see them also supporting a variety of teams, and I think it's very easy. And we'll see, between now and the next time we speak, if I'm right about this, but it seems very easy to make friends in the Solana ecosystem. And when you introduce like a new thing like this, even if it exists in TradFi, you got to have friends. That's the name of the game in crypto. Friends are how you survive, right? Community is how you survive. Without it, you isolate and dry up. Unless you get phenomenally lucky. But yeah, without that, everything dies. And so I'd say Solana is the place for that, for early stage, for new ideas, for interesting novel concepts, and even taking like very traditional systems and bringing them into the space that we call crypto or Web3 or blockchain or however you want to think about it. Like it's very easy to bring those traditional systems, put them here, and know that other people will be able to use them.
Great, fantastic answer. Let's talk a little bit more about the stablecoin side of it. So you have USDX. You've been scaling up volume here to 0.80 cents per second, or 80 cents per second. Just walk me through USDX. Maybe give me a little more information on this and how you guys are scaling it.
Yeah. Oh, goodness. I have a call later today about scaling it with, I'm not going to say which one of the DEXs, and talking about getting into a variety of strategies. Let me say how, like what it is. Let me define what USDX is, and then I'll talk about how I'm thinking about it. USDX is essentially the currency that is, like the dollar pegged currency that is the default lending, the default like currency that the loan, that the blockchain loan is funded with. And so rather than pulling like traditional dollars or other dollars from on-chain, we are bringing net new deposits on-chain here, and they're backed by the loan. And so USDX is essentially minted against that loan. The loan then sits there. The loan has a market value which can be sold, traded in the event that dollars are needed. And so that's what USDX is. It's a mortgage-backed stablecoin. It's backed by these different assets that can be liquidated, that are often liquidated, that can be borrowed against, that can be sourced and turned into dollar liquidity quite easily. And so that's what USDX is. How we're thinking about scaling it, there's one that's really important to me. That is lending. I want USDX to be available everywhere to borrow against a variety of collateral, whether that's on Camino, Loopscale, or even Aave, Morpho, or whatever the other ecosystems have. Solana and ETH is kind of all that's left at this point. Those are the winners. Welcome to the future. And so that's the one that's important to me, because what that enables, lending for USDX, is I've borrowed this against my house. I owe a rate against it. It's now not doing anything. That sounds like a bad deal. However, if you still have, let's say, ownership or representation of ownership of that thing, and you've essentially just lent yourself money. And the nice part about lending yourself money is when you make an interest payment, it comes right back to you. And so if we can get USDX into these lending pools, any borrow rate at all is good. Because let's say there's a yield rate tied to it, and the yield is, let's call it 6% for easy math, and the borrow rate is 7. So that makes their net borrow rate 1, which sounds awesome. I'd love to borrow money at 1%, right? Borrow rates of 1% sound awesome, especially in the Solana ecosystem right now. But what it does for the homeowner is they're now earning that +1, and the borrower is paying the other 6. And so they have just created new liquidity, net new liquidity that not only didn't exist on blockchain before, it didn't exist anywhere before. And it's backed by a non-fungible tradable asset that has a set market value that is more actually than the amount they funded it with. And so it's sort of like double over collateralized. And then on top of that, it's backed by their safe, secure US housing asset. And so that's where I want to scale, largely lending as much as possible, lending by default. Other things that have been popular that we'll get into hopefully as quickly as possible. Looping's quite popular right now. And obviously that has a higher yield opportunity. That might be the number one reason people are borrowing. We'll see. And then I think really being able to use it as collateral on any sort of exchange is a great idea. I know USD1, they had a great scaling strategy. If we can learn anything at all from that'd be ideal.
I want to ask about the security of USDX, because essentially if I'm trying to get my money back, so if I buy the stable coin and I want my money back, if you get enough people that do that, how do you go to mortgage lenders and say, hey, look, I know you've taken some money from us. You have 50K against your equity of your home, but we have a bit of a liquidity crunch here and we need that back. What happens in that scenario?
Yeah. Are you familiar with USDAI?
Yeah.
Maybe not.
DAI.
Okay. They're
DAI. Yeah.
No. USDAI. They're a separate thing. They're like a GPU lending. But yeah, or you could say also DAI. I mean, DAI is frankly a more applicable, better proven business. And frankly, the collateral risk is much more comparable. They have these positions. You can incentivize liquidity providers in various ways. That's something we've thought about from like a tokenomics perspective. I know we aren't touching much on that here right now, but that is something that I spent 3 hours writing about less than 2 days ago. Is like actually how do you incentivize this from like a tokenomic standpoint, like liquidity providers who can absorb that debt, underwrite that debt, back that debt, be like a lender of last resort. But I don't think that will ever be necessary, God willing. Fingers crossed, knock on wood, right there. Because what we can actually do as we scale, we could either go get our own lines of credit, or we can work with people who have existing lines of credit they're not fully tapping. And let's say we're integrated into 100 different partners, 50 are banks, 50 are mortgage lenders. They all have lines of credit that they use that really, frankly, can only be specifically used for this type of instrument. And so the event of like, okay, well, maybe they can't buy it, maybe they don't want to buy it, but they can lend against it, they can fund it. And so right now, by default, we're funding, if you go back to what I said, I don't know how many minutes ago that was, but we're funding the loans with this USDX. They could be unfunded in USDX and refunded in a different currency. I wrote the line of code for that. Hey. And so at any point when somebody comes to redeem, you can actually just swap the currencies. And so like, let's say we have warehouse lines in excess of say 50 million. That's a nice starting point. And we have $100 million out there, and we have some dramatic event where people actually redeem half. If we have a warehouse line of our own for 50 million, we can just replace it. And that warehouse line, if it stays open for a very long period of time, it could be, a bit interesting. But now you've actually properly funded the loans in dollars. They're dollar funded loans, which makes them a very traditional loan, which opens up the entire world of liquidity to you. And you have, at least 30 days to liquidate them, if not much longer. Let's say perhaps even 90. And when we're talking about the deployments for the home equity accounts, we're figuring out exactly what the right deployment period is. Right now, a lot of people are opting to do 90-day deployments. So they want to lock in, they want to earn the set rate for 90 days. And so like, if we have that timeline, we have a $13 trillion market that we can liquidate to that has 300 billion in daily trading volume. So and like, even if we are completely outside of that, getting into it takes max 15 to 45 days.
So what you're saying is there's a very liquid market for the underlying mortgage security that is on this DOT, or is filed as part of this DOT here.
And so that's why we did go down the route of the DOT, because it opens up the door for that market. If we were doing some sort of new instrument, you might still have hedge funds that play in it, and you might maybe that's still a 3 or 5 or $30 billion daily market, who knows? But it's not the US full-blown government mortgage market. And so that's why we went down the route of that actual filing.
I can't remember if we talked about this last time, but I'm curious what your like current go-to-market is. Who are you targeting? Who are you talking to? Is it your neighbor? Hey, bro, let me show you how you can start earning off of the equity on your house. Or is it is it your dad? Is it
off Anatoly's house?
Yeah.
No.
Hey, let's do it.
Or is it firms? Like who are you guys targeting right now to really just blow this thing up?
Yeah, when I started Stable, it was an idea that I had because of an individual. It's like an individual who had one problem with their one house. I went, well, crypto should be a great place to source, liquidity for that issue. People were talking about fractional real estate or something. And so I'm like, well, maybe there's like something there. And like, that was like the start of the idea. And so it did start with this consumer mindset. And that has been our sort of go-to-market by just I'm kind of a pusher. I'm a pushy executor, or I'm like quiet, or I'm just talking complete nonsense. Those are like my 3 moods. And so in the pushy executor, which is like, the default go-to-market for us, we're just like, okay, we're going to keep pounding that one opportunity. And so now we have a bunch of individuals. We actually just did, we may have fully KYB'd them, or we're finishing up the process of KYBing our first business user. But we're going to shift. We're still going to stay with consumers for now. And like, that'll obviously always be, for the foreseeable future, that'll be an opportunity on the site. That'll probably stay forever. But for our go-to-market on like The other side, we want to be distributing through B2B relationships, whether that is B2B to C. That's the most logical, easy. It's like, hey, we've done this thing. You're a business. You should replace us. It's going to make you money. That's a very straightforward sell. And then the other one would be like a B2B to B. And that's like the ultimate end mortgage goal. And that's what most of the mortgage industry is. And so I think where we are, we sort of need to take a step back and think about which go-to-market are we talking about. I think the go-to-market of both USD1 and Prime are two things that we can really learn from, especially within the Solana ecosystem. And if there's a hybrid model, we can derive from that. That's something I've been thinking a lot about as far as scaling the stablecoin. As far as scaling the home equity accounts, we'll continue to push on consumer, but we're starting to open up the door to like, okay, we need bank partners, we need broker partners. And we're not talking about like them helping us. We're talking about them helping themselves with our own product. And so that'll become the focus. And I'd say no later than summer, that'll be like the core focus. And so like maybe we can onboard at that point, maybe we have all the liquidity we need to onboard a couple hundred users per week. That's cool. Those people already onboard 1,000 users a month. Just have them start onboarding those users. And I don't know if I used to be a mortgage loan originator. If you ever worked with them, they'd love an opportunity to give you a call and say, hey, I want to make some money.
Right.
And so,
right.
Let's refinance your loan.
Right. And so what if they had a new call that was a lot better for you? And like wasn't like a, hey, I want to sell part of your house, I want you to borrow against your house, then you got to figure it out. It's like, hey, here's a product. And maybe at that point we've partnered with larger institutions. Variety of them are exploring the space if you haven't noticed. And maybe we've set that up. And so it's like, hey, there's this new
who's
startup
exploring this space?
Can't say. I mean, with mortgages, nobody. With mortgages, nobody yet. We are fortunately leading a lot of those conversations. And a lot of those people tell me, like, you're the only guy who's talking to us about mortgages.
Crazy.
They've been telling me that for over a year, which is great. I hope it, inshallah, it stays that way, right? And so, well, at least until we get a couple billion. But yeah, I mean, Morgan Stanley, obviously they play a lot in the mortgage space. They're exploring crypto pretty heavily. You have Fidelity. They don't touch mortgages as much, but they're a phenomenal wealth advisor, wealth manager. Interactive Brokers is more of like a interesting model. Robinhood is obviously super hot. I've been a user of Robinhood since 2016, so now I'm boomer legacy user of Robinhood. That'd be very interesting. Their retirement accounts, their transfer accounts, they're thinking about wealth transformation over generations. Yeah. We have a good solution for that. That's all I'll say. Vlad, call me. But yeah, I think there's a variety, and we likely have one of those, and it's like, okay, now it's a pitch that your broker's picking up the phone, calling you, saying, I want to make money again, but he's saying, hey, Morgan Stanley, or hey, Robinhood is offering this new thing. Why don't you check out?
Do you think Vlad is so I listened to Vlad's pod on Bankless, and what was interesting is they asked him, like, oh, do you see this like hyper gambling culture? And what he said is that majority of young people don't actually do that. Their behavior is very much the opposite, which they open retirement accounts earlier and earlier, and they're very in tune with just investing at a very simple level. But they're not all, there are the hyper gamblers, but I think that's like they stick out just because you're on CT and like that's all you see, right? You don't see the guy who made 50 bips on his yield this month from his whatever account. Right. But okay, so is Robinhood gonna do this with Stable?
We'll see. I mean, I think I just floated an offer.
There we go.
All right.
Well, Vlad he's an avid listener of MTG, so I'm sure he'll be getting to you promptly.
Yeah, so you kind of look like him to a degree if you changed your hair a bunch.
Change my hair. He's got a little bit of a goatee going on, right?
Yeah. No,
Dom is a lot less rich than Vlad is, unfortunately.
Yeah, maybe one of these streams I'll dress up as Vlad. Maybe for Halloween next year I'll dress up as Vlad.
That'd be fun. I'll come as Jamie Dimon.
Okay, there we go.
That'll be good. That'll be great. Yeah.
One thing I keep coming back to, Winston, is like, man, this is like the equity on someone's house, and we already mentioned drift and like these exploits, but like, what do we have to do to get to the point where people feel secure doing this? Because like, man, it's going to take a lot of convincing, being fully transparent for me to be like, okay, I got this house. I've been saving up all my life. I'm trying to become an owner, and I have, this much equity in it. Let me just give it up to this DeFi protocol when I know DeFi protocols have had issues in the past. I'm like, how do you solve that? We need to answer this.
Yeah, I'll start with a story. It was 2022. I just raised for my first startup, Meta. We were already going into another round. We should have already, if I was me now, we would have already closed another round. But we were, exploring that. We were kind of hot on the market. It was ETH Denver. I think it was my first ETH Denver. Walking around, this guy randomly walks up to me, and I noticed nobody's standing around him. I thought that was interesting. And anyways, he's talking. I'm not talking much. Start getting into what does he do, and in retrospect, it's phenomenal that he told me this. But I didn't think anything about it at the time because, like, we were building, to a degree, a social network. We were building, and on the terrible side, we're perhaps building Palantir or the CIA of the metaverse, right? And so he starts talking. His job and what he says his firm does is they send people to in-person events to meet key targets and befriend them, so that they can start to build a social graph.
Key targets for what?
We didn't get into it. And
well, you've been seeing the North Korea stuff with Drift.
Yeah, so I saw him again at a conference in Miami not too long after. That's when I figured out he wasn't targeting me.
Was this guy North Korean?
No. This is like a white European guy.
Oh.
Maybe, yeah, I think it was European. It's possible he was American, but I remember a European accent. Very forgettable guy, though. The only reason I remember is because I saw him twice. And the second time, I brought it up, and I said, how's it going? He goes, usual. But yeah, so there are active people. Like this world is a complicated place. There's a lot of strategies you can do to achieve outcomes that are not good. And there are not good people in this world. And so that's always going to be a risk. I'd say, like, the best thing we can do is be conscious and cognizant of that. And, I haven't fully debriefed on the Drift issue. I hope it gets resolved in the best way possible. This really seems terrible. And I think it's a travesty for the industry as a whole, not only Solana. But, thinking from safety first standpoint. And then I went to the Kraken Institutional Day, and Dave, their co-CEO, was up there. He gave a great speech about always being paranoid. And so I think that was shortly before. That was at DAS, and so that was shortly before the thing. And I think that really nailed it in for me. Is like, we have to be paranoid. It's our responsibility to be paranoid. Be safe, be secure, and then make sure that whatever risks there are, the homeowner is the last person to eat it. Mm-hmm. And that's not just because we're nice people. That's like in our own self-interest as well. Because when you start talking about scaling this, at some point, our number one risk becomes headline risk. And grandma lost her house. Great. Stable just lost 10% of our customers. We're going to lose another 30% over the next 6 months. And we're getting sued with 2 class actions. Right. And so that becomes the risk. And so it's a ground first. The main thing we think about is security. And I just assume that everybody is trying to scam us in a way that hurts our customer. And so that's the number one.
It's tough because the best yield sources are things like Jupiter's liquidity pool, where you're earning both trader losses, but also fees from every trade. So it is a challenge.
That's why people were in Drift. We were like, if they can sort out their issues, and I think Drift is still a viable option. But there's a lot of issues that have to be sorted out there, and I don't know how long that will take. But I hope it all resolves well for everybody involved, because there was a lot of other people got hit by that too, and that's not fair, and that's just not how. That is how the world works, but it's not how it should work. And so, if there's anything we can do to correct that, that'd be great.
Yep, absolutely. Anything you want to leave the people with, kind of just your thinking or where your head's at? Anything we didn't cover today?
Yeah, I'd say, look, it's good for society if USDX scales. Period. Bottom line. It puts the means of earning the yield that banks have built their entire industry on in the hands of you. And like, that's cool, but it also then gives you the authority long-term to influence and perhaps even one day set borrow rates. And like, everybody would lend their neighbor $20 against their house. Sure. What if, you could do more, and maybe you'd give your neighbor a better rate. Maybe they'd give you a better rate. That gets very exciting for me. And so I think that's one reason that I continue to press down that route. And so anything anybody can do, and whether that's, you go swap in your dust fees into USDX or whatever you do, or you provide liquidity, you're helping not only yourself, you're helping society. And so I think like that's good. And that's like the net good that we want to bring.
Yeah, look, it's a big vision. If you guys can be the ones that crack it, you absolutely have like a massive industry ahead of you, and I just think a ton of growth. It's a tough thing to tackle, but like it's really fun, like seeing the vision and believing, okay, this could be done, and we could have a future where mortgages are on chain, and like it actually makes sense to get some of the yield on this stuff. So it is big vision, but we believe in you, Winston, and it's really fun, like an interesting, fascinating watching this journey unfold.
Yeah,
Gotta
absolutely.
shout out Crypto Jones here. Stable sounds like a fantastic financial instrument, but how do you bring this product to the masses? I mean, you just kind of explained that with your vision there, I think very eloquently. But
I'd say I have a very quick answer to that as well. We're at the stage now where everything across the board has to level up. We're going to hit that stage probably 10 more times over the next decade. And like that, we have to, everything has to get better across the board, across like all of our standards, all of our partners, all of our integrations, everything. We've hit that stage, I think, that I could like visibly explain, like, here was where we were, then we did this. And like that became the new us. That's happened at least 3 times already. And I think that'll happen at a slower rate, but at a continued rate. And so, yeah, like we have to start thinking about B2B partners. We covered that, I guess, in the go-to-market section.
All right, very cool, Winston. We'll be in contact with you. Fascinating stuff, and always a pleasure to talk and watch this development happen.
Thanks.
See you,
Chat soon,
Winston.
guys.
All right, buddy.
Thanks for having me.
Yeah, always. Man, cool talk.
It feels like, okay, so like it feels like, and I got this kind of feeling at the end. I mean, we're kind of like, market's been shit, everyone's like not paying attention to crypto. Crypto's not hot right now. But like, if guys like Winston are right, and you can slowly build out these kind of different use cases, unlocking, because I could go and I could get I could borrow against the equity of my home today and go take that money and go buy stocks, go buy another property, go, invest it some way or whatever. But my only options outside of like buying bonds, which yield like a few percent, 4%, like is equities, or like there's no other options out there. Nothing that really generates
as secure as bonds.
Yeah, like what if you want to earn 10%, right? You're above the threshold of, let's say, private lending. But you're kind of in the liquidity provider realm there. Like 10 to 15% is what you get on like a hyperliquid, for instance, providing liquidity, right? I mean, there's no option to do that today. That's what it seems like he's doing, because, if you, let's say you borrow, like, okay, in the example I used, $1 million home, you borrow 50K, so that gets you to 85% loan to value. You earn 10% yield per year on that. Like that's $500 potentially a month. I mean, if your mortgage that you're spending, $3,000 a month, hey, pay $500 of that down every month. That's pretty attractive.
Right.
And it's even better if you have lower loan to value. Like if you had $1 million home, but $500K outstanding loan, right? You borrow $100,000 or $200,000, and then that 10% becomes like maybe your whole mortgage payment. So I do understand what they're doing. I think there's value in it. Refinancing and getting home equity line of credit, or HELOC, as we call it in Canada, is something a lot of people do. But they misuse those funds. They often go buy cars, go on vacations, refinish their basement. Like that's
I
bad
mean,
use of that capital.
Moreover, think about if you stack this, right? You make the 10% that's paying off the mortgage, and then you also have it cash flowing. You have a tenant in there. Well, now you have an entire another property you can put a mortgage on, and so you now have a mortgage from one, the equity from your mortgage on one that's being paid for by the cash flow, now being used to buy equity in another building, and you can start really kind of building out a portfolio this way. Man, it's just like there's a lot of trust involved in trusting these systems.
Yeah,
But like
it's a lot of trust.
Like on one end, it's like, oh my gosh, if he cracks this, it redefines the system. Like it's first kind of person thinking in this direction. It's insane. And then on the other hand, it's like, okay, but that takes a lot of trust, giving equity in your house up to
and there's also some complications sometimes. Like if you have a lien against your house, that can affect your credit score. So it's like, there's some things that I every time Winston comes on, I get it more and more, but also like some things
I fully get it. Like I fully get it. It is, both of our conversations today were a little more complex. So like apologies for trying to keep it surface level here as much, but it's like these kind of have to go deep into it. Like a DEX aggregator, we have to get into like the guts of how this DEX aggregator is better than other DEX aggregators, and then same with this, we have to get into the guts of how this actually works. A little more complex stuff. So congratulations if you bared with everyone through it. But man, the vision's really clear. The execution is gonna be a difficult road, but Winston seems to like beyond. Like Winston seems like he really knows his stuff. I'll be honest with you there. So,
oh yeah, he's a professional. And then definitely want to back founders. All right, Dom. I don't know. Like, are you? What are you thinking here to end this? I was just gonna check in on markets real quick. And
I got a few things. We can check out this new Meteora update, and maybe I had like one or two things to cover, but I felt kind of off my game today. I don't know, dude. I'm not sure if I was tired or what, but they just wasn't firing as hard up there in the nugget.
Yeah, you're right, Crypto Jones. Renovations are not exactly a bad use of HELOC capital, but I think a lot of people just hire a contractor and it doesn't equate to the value that it costs. But yeah, sorry, go ahead, Dom.
No, okay. Let's just run through a few things and we can chat. But we'll keep it pretty short today, guys. And tomorrow we do have I forget his name, but Chill's been really excited for this project, so we got a fun Friday. I'm not sure if
the fraud, crime, and profit folks.
Right. That I guess you could call it Ponzi. It's done really well. So nonetheless, let's see. We talked about SMCF quite a bit. I could talk about KNX. I'll probably leave that though for Chill. Let's just talk about this update, right? So this is a Meteora update. Shout out Meteora. And guys, if you want to trade stable, you can do it in the bottom left corner on Trojan QR code / at MCG. But here, let's check this out. This is from Zen. He said, we set at Met Dobby that our goal is making LPing easier at every step. Easy to start, easy to manage and print, easy to level up. These are the promises we made to LPs. Right now, a big part of our work is around helping LPs manage positions better and put themselves in a better position to earn fees. That is why we have spent so much effort upgrading Meteora to give LPs more clarity, especially through the portfolio experience. More clarity on how each position is performing through positions, P&Ls, so you can manage with more confidence. More clarity on your historical performance through P&L calendar and charts, so you can spot patterns and make decisions on future positions. This portfolio upgrade is one of our first big steps in that direction. I think it goes back to just chipping away. I think that's what Meteora is trying to do. They released the terminal. They're releasing the, portfolio tracker. So let's just watch this video and kind of understand what it is here, just so we can showcase it for you guys, because they're chipping away and we love it.
Can you, I don't know if you want to hit music, try resharing that.
Oh, okay. I'm sick and tired of this not sharing my volume, dude. I don't even understand why. All right, but I'll play it again.
You guys doesn't do that for me.
I wonder if you have a different setting or something, dude. Either way, whatever, we'll play it.
In 2026, we shipped P&Ls for the LP army. All you needed to know is whether you're in the green or in the red.
Simple as.
We shipped it, you loved it, and now we're building on top of it. So today, we're introducing a new, redesigned portfolio page on Meteora. Here's what's new. First, the liquidity card. Every LP has their own liquidity card. A clean breakdown of your all-time deposits, net worth,
Oh,
P&L,
nice.
and win rate. You can also view your performance across different timeframes and achieve
This is for you,
absolute
Crypto
clarity
Jones.
on how you're performing. Next, we've revamped the position view across the portfolio. You can now see pool prices and P&L for all of your positions in real time across both the DLMM and Dynamic AMM V2. And now the biggest upgrade, the one most LPs have been asking for. The P&L calendar is live on the portfolio,
Nice.
alongside the P&L
Gotta have a
line
P&L
and bar
calendar.
charts.
Yeah.
This means you can track your progress each day. If you're stacking fees, you should be able to measure it, track it, and show it. That's what the new portfolio is for. So go and check out your new portfolio, export your liquidity card, and share it on X. Tag Meteor AG and show us how you LP.
Yeah. They're making all the right moves, man. Making all the right moves. Crypto Jones, how's the LP been going for you, dude? Curious.
And the best place to learn more is code discord.gg//LP Army. That's the place where you get DLM information, a smooth brain, non-liquidity provider experts. We're traders. We're the ones creating the fees, but we'll get there. Chill's gotten there for sure. He's had a few. Oh, awesome.
Good.
Crypto Jones. I'm glad to hear it. I think ultimately with DLMing, it's just like actually doing it. Like you do it, you learn a little bit. It's a game changer. Boom. Look at that.
Yeah. It's simply, as soon as I start having more trades to take, I'm just gonna DLM it. My trading strategy, I think I've explained this. I'm not the type of guy that puts, Tensor or whatever let's say I'm investing Tensor. I'm not putting Tensor one clip ever. Like I'm totally a DCA guy through and through. So it makes sense for me to use Meteora. As soon as I start taking trades again, I'm gonna be rocking out the Meteora. It seems pretty simple, honestly, in my mind, how everything works. But it's nice to have. I really like on the chart now how you can have the bin steps or the box, whatever it's called. I really like that. But whatever. Meteora is great. Glad to hear Crypto Jones is rocking it out in the free world. Let's take some time now to talk Pump Fun, because they've been doing some very questionable things. Mayhem Bot, which I believe is like their Mayhem mode that Pump Fun has taken $1.3 million in liquidity today alone. Pump Fun made a literal crash game with 27% house edge, and all you suckers fell for it. Disgusting company that we should all boycott immediately. Hey, don't have to ask me twice, brother. Do not have to ask me twice. I'm happy to
just not trade on it. Just don't trade on it.
I boycotted it. Along with most of the other launch pads. So there you go. This is what Scented Wallet's bonding looks like. A total 8.5 million. Man, Scented was just on Rasmer the other day, I believe. But like, geez Louise, total 8.5 million of all outflows in a year from his main wallet. It's crazy. Once you get tracked like this, right? Once Scented's wallet got picked up, this guy cannot lose. Anything he touches gets instant bid up by copy traders. And like, whether he wants to sell on their head or not, like it is impossible for him to lose. It is impossible for him to lose just because it gets bidded up so much from his entry zone from copy traders. So he's got a total of 8.5 million in outflows in a year from this wallet. He's got 365K deposited to change now, 4.7 million to Kraken, 1.2 million USD through D-Bridge, blah, blah. Only 100K plus transfers to hundreds of farm wallets that he uses. Quietly sends 20 to 30 sold to fresh burner wallets. Each burner does one single radium buy of any different token, sells/transfers a token back to the main wallet. Then the now empty burner is closed, repeating the cycle at scale while staying under the radar. His trading style is basically buying large supplies at low market caps and selling for some percentage of profit. He does this all day, rinse and repeat, extracting $10 million from the trenches in a year. State of the trenches, boys. State of the trenches, boys. It's not plus EV to be in the trenches right now. Like, your estimated value is negative for sure. Don't even do it. Don't waste your time. So yeah, that's really all I had to cover today. Just a little bit of shit talking. And yeah, you went over the either way stats, right?
Yeah, I did. And then I was about to pull open the token, but yeah, this is Crypto Jones. I don't know if you're still in either. Sorry, I need a sip of water. I don't know. Go for it.
Yeah, I mean, tokens just been raging. I guess I'll look at this. Over the last few days, we've experienced a positive influx in usage. Users are vibing, building, and shipping at a rapid pace. Here are the metrics: 319 new users, 488 new apps created. Wow, that's 488 new apps created and 319 users. That's really good numbers, honestly, in terms of like user to app created here. 27 projects exported, 234 successful deployments. Keep building. So I'm wondering if this is also a launch pad. I just haven't taken, bro. And it's an issue I'm facing right now that I'm just too lazy to even dig this because I know the markets are so bad. It's like the odds of it running are just not even worth my time digging it. But I really do need to dig into it more. I should have them on the show, honestly. The way I'm digging into projects is literally just getting them on the show. Like that's been my DD process recently. I'm really not digging anyone outside of the show. Yeah, Meteor gives you an engine trend trading. I mean, simply just fighting against a permanent loss. Like, even if you're just entering using Meteora pools and their tech, like at least you're just fighting impermanent loss when the token does go down. Like if you just make a bad trade, it's at least nice to have that little bit of buffer that you can get from the fees. So there's an edge there. I don't know if it doesn't make it always plus EV, but at least you have like that edge. So yeah, here's either way. Pull up the chart. I'm not sure. Okay, the volume coming through this is pretty good though. 1.6 mil in 24 hours. I remember Crypto Jones, you voicing some concerns over the holders. This volume is really great. I'm not sure what kind of pools they have. It's a Meteora. So people might have been eating off this. We've been in this range now for, call it a day or two. 12 days. Oh my gosh. I'm on the 4 hour. I didn't even realize. Yeah, we've been in this range for 12 days and we're doing 1.6 million in volume. I mean, I have to go back and look historically, but if it's been doing this kind of volume the last couple days, let's see. I mean, this daily candle doesn't even look crazy compared to the previous days. So these days probably much more volume. If you were LPing this, there might be some cooking here. I'm not sure how many fees this pool is, like what the taxes are, but yeah, Crypto Jones probably would know better than me. The organic score is concerning. Have you delimbed this at all, Jones? Let me know. Because the volume's pretty crazy. I just don't know if the pools have any, like, if they're very profitable. But guys, gonna keep it short today. I don't have much to talk about. Monday and Friday, we're really covering a lot of on-chain stuff, covering like state of the markets. And then the middle of the week's gonna be much more like interview focused. Just trying to put some more structure to the schedule. I could go on and talk about this stuff, but man, I wish I had more to update you guys with. I don't. State of the market, boys. State of the market. So, Josh, unless you have anything, I say we just wrap it here. Keep it.
Yeah, I do. I took a position in something that Game put in his TG called Liquid. LIQ is the ticker. I haven't done much DD on this yet, so just keep that in mind. But let's see, that's not it. That's definitely not it.
Is it a Solana based token or?
No, it's base. Here's the CA. That's definitely not it.
No, that's definitely not it. That chart
is not real. So look, I'm doing DD on this. Keep in mind, still figuring it out, but Rainbow Wallet has some sort of relationship with these guys, either some sort of integration. And it was by the founder of Clanker, which Clanker was a big launch pad for agents, I believe. So the real circulating supply is actually $2 million because they bought in the first candle, like I think 30 ETH worth, or about $60,000 is they bought a chunk of it and staked it for, I believe, a year. So, I don't know. Anyways, just keep this on a watch list. I think this is kind of interesting. I'm going to do a little more DD, and if I find anything, I'll let you guys know. Crypto Jones, you had a one NUE. What is it?
I saw one. No, that one looked pretty
NEU?
like a meme or something. I looked at it real quick when you pinged it. Yeah, but good call on that, Crypto Jones. Oh, you're talking about this. I'm playing at NEU. It's been doing well. Okay. Let's check it out. Yeah, Josh. Might be alpha though. I like the Rainbow team a lot, and I like how they did the RNWB token where they have like some sort of equity component in an SPV, I think. So
you let me, I'm going to do a little DD on this. If you can take the next segment, and I'm going to look at it. My entry is at 3.2, just under 3.2 on this.
Okay. So
I'll
right
let you know.
around here. Yeah, no, let us know, but that sounds pretty interesting because I do like the Rainbow team, so any connection there. And then Banker Dev or Clanker Dev is pretty chatted, so pretty goated. So not a bad. I'll take NEU real quick. And I'm not sure if this is the NEU I looked at, but it looked like a meme if it had just launched. New coin. Oh wow, okay. If you took this on DLMM, you might be looking pretty good actually, because that volume's insane. Yeah, I looked at this, the first meme coin in the history of crypto. That's what I saw. So I was pretty interested as soon as I saw that. But I'll check out their Twitter or the Twitter community here for
Dom,
you.
your internet is it's getting dusted.
Is it, bro? It's been
All right,
such bad weather out.
You're back. Okay, go for it.
Yeah, no. I was just saying, like, I was kind of disinterested when I just saw like it's a meme coin. But you know, for the sake of my boy here, I'll check it out. Oh, dude, I love this guy. I love this little squirrel from Ice Age. That guy's such a Chad, dude.
Oh yeah, the Ice Age squirrel.
Yeah,
Yep.
bro, that guy's such a baller. I don't know if he has anything really to do with this, but let's see. What's the thesis? The first meme coin, but I've just seen so many of these is the issue. Like I've seen so many. The first meme coin. This meme coin came before Bitcoin. This was the first crypto coin. Like I've seen this kind of stuff before. Before I share the most sacred and secret history of the first real meme coin in crypto, I mean no harm to the Doge community and Billy, but it's time people knew the truth. As we all know, Dogecoin was created by Billy in 2013. Billy worked on Dogecoin's core as a main developer for its release. We all know that as fact, history is written by the victors. Luckily for us, the losers is still alive, and we have the data to support the truth. The original idea of the first meme coin was to launch NuoCoin firstly, a meme coin about a squirrel with actual utility supporting the artists. The original dev was supposed to be this guy. It's got his GitHub, which I am in contact with, but both Dogecoin and NuoCoin had the same brain behind them. Jackson Palmer, the guy who was betrayed by Billy and the Dogecoin community and crumbled crypto by abandoning them because they betrayed him. I will be linking some screenshot links, which will explain some DMs with the original Dogecoin members who don't want their names to be associated, but want the truth to be told. It's time we share the truth. They don't want their names to be shared, but they want the truth to be told. That could be a little sketch right there, boys. Reminder that there are people who unironically thought Dogecoin was not just a giant inside joke that got out of hand. I couldn't even count how many times it was called idiot. I was called idiot because I said Dogecoin was just a joke. Literally, it was a joke. I get kind of angry / sad just thinking how many people were brainwashed into thinking Dogecoin seriously and investing on it. Dogecoin plus NuoCoin. This is from Jackson Palmer. New Shibes. Feedback appreciated. As some of you know, I've been helping the new coin with their recent launch. If you haven't already, I recommend you check it out. Okay. After Billy front-run Jackson launching Dogecoin before NuoCoin, things got out of hand. Jackson was left shocked by the Dogecoin members from not supporting the idea of making meme coins with utility. Okay, so it sounds like Dogecoin actually did come first, but NuoCoin was maybe idea first. And he was left shocked. He had a choice. He decided to put 3 names as the founder of NuoCoin to hide his name because Billy and the members of Doge went full war against him, launching a second coin which could split people instead of focusing into one. So Billy betrayed Jackson for money and chose Dogecoin community instead of siding with the guy that had the original idea. Okay, so came before Dogecoin. He's got some receipts here. Could be some fabricated stuff. Let's talk about the comments because there are names being blocked out, which is a little sus. Dogecoin was earlier in NuoCoin, came in 2015. Read the article. Where's the okay? Let's see what Grok has to say. Grok did not respond. Nowadays, there's no more nice guy. Okay. Hey, you know what? There's volume. So if you're delimbing it, good for you. You know, I've seen this kind of stuff many of times before, and like it doesn't last. I doubt though you're playing this as a long-lasting trade, if I had to guess. But yeah, great volume. great volume. So if you're delimbing it and you're cooking, shout out. But gonna be you know, something I pass on. And again, like I should be delimbing because I'm in the trenches. I'm seeing these things launch. I'm seeing these things run. Crypto Jones is coming and giving us the alpha. And it's like, I want to trade it, but I also don't want exposure to this as for the long term. Okay, Crypto Jones. I'm not. You're not holding that. You're not putting this in your index fund. There's no NEU coin in your index fund or your retirement fund. Yeah, I hear you, Brady. Josh, any more info on Liquid?
Yeah, so a few things. Okay.
You want to pull it up?
Yeah, I'm gonna do that. So, all right. So here's the guy who created Clanker World. As you can see, I'll go to this real quick. This was a very, I think, successful like launch pad for agents. I see that he's rolling this out on Solana was another thing recently, and it's actually funny enough. I believe a Bags token. I know there's a Bags token on there. Don't quote me on it. I don't see the official CA. But anyways, go look that up. You're on your own. But they integrated with Rainbow, and this is one of the things that's most important with these products. Distribution are everything. And so I'm like, okay, let's look at this. It's a fork of Clanker v4.0, 4.1. Here's the CA. So go check that out. Then Rainbow's getting in on this and showed up with Liquid, their new token launcher, the best in the game, made specifically to make base run again. Fun, open, built for everything, blah, blah, blah. All right, so nice little graphic. So then I go over and I say, okay, like, is anyone using this? I found this Dune dashboard here, and already there is $4.2 million in trading volume on Liquid yesterday. And so far, so this is another thing to look at. Trading volume. So here's the tokens created. So far, 280 tokens. 280 tokens launched yesterday. So far today, 133 tokens. So then I see, okay, tokens created by trade or by venue. Rainbow is accounting for 84% of the tokens. It seems like it's some sort of token launcher. Tokens by trading volumes. This is interesting. This is why distribution is key. Of the 4.1 million, 3.7 million came from Rainbow itself, from the traders, I guess, using that wallet. Interesting. This is very, very, very interesting because this thing is trading right now at 2 million circulating market cap. Let's see. Any other DD? I think that is all I have right this second. I don't know any of these tokens, what the tokens that are being launched on are. Let's see. Okay. Let us look previously at when Rainbow.me published their proposition to acquire Clanker. Now ignore all the Clanker specific proposals. Okay, focus on the. I don't know what this is. Okay. Worth reading. Liquid Origins. Okay. Anyways, I think worth having a look at this. Now, Game mentioned that this is not yet listed on FOMO, and that's kind of where some of his thesis lies, is that it hasn't been discovered yet. But I'm sure if volumes happen, it will get discovered. So
I think I might have to go to tactic mode on this one, off stream here, and see what I can find.
Yeah, we need to dig into this a little more off stream when I can like actually do proper DD. But add this to a watch list, and let's see what happens.
Yeah,
look what Rainbow's tweeting here.
I do like Rainbow a lot. Okay,
12 minutes ago, the king doing king right here. 12 minutes ago, right? Like, okay. Okay, found Liquid on the moon.
Okay, yeah, I gotta figure out what their association is. It should be pretty clear. I mean, it should be very clear. If Rainbow's like hard chilling like this, literally hard chilling. This is Rainbow's account. It's just a full Liquid feed.
This is legit the rainbow account, right? This is 100%. Yeah. Yeah. Looks followed by all these people. Yeah, I don't know, guys.
No, it's a good one to
Interesting.
watch. Honestly, great comms
Keep that on the
that.
watch list.
Speaking of great comms, bro, VVV. This is one I've been talking about for like a century. I feel like just continues to rip up. What's so fascinating about VVV is like in a time where no one felt like they were innovating on token, and we kind of got to a point where, man, again, remember why crypto tokens were kind of valuable? It's because they were very hard to value just in general, and like it was in this big growth market, and no one kind of knew what it was going to grow into, and layer ones have these network effects that kind of make their token intrinsically valuable, and they have their gas tokens they have to spend. What's happened now since we've gotten like a lot of, I think, tribalism for different layer ones, right? A lot of people, for example, just on Solana trading tokens, is you don't have tokens with a lot of inherent intrinsic value or network effects, which is why we're seeing a lot of tokens. I think you need to replace that with like equity today. But VVV, for example, having its compute, right? You stake DM to earn VVV, you have to stake VVV to get like one token equals $1 a day of compute, right? Right now it's $7.60 per token. So for $7.60, you get $1 per day of compute. So I guess it technically pays itself off in 7.6 days, if I'm understanding that correctly. It's got actually interesting inherent intrinsic value built into the token, unlike a lot of what we're seeing. So glad to see this one continue to just chug away. We had about 25 days of sideways, kind of in this range before we started resetting, but barely any dip here. And we're just going to continue up. Of course, like lining up the finite value of compute that they have available. And, so they have a finite amount of compute, but you get a piece of that when you hold the token. And so this is kind of like a play on how valuable is compute. And, you have it for the rest of your life as long as you hold a token. It's a really interesting mechanism. So love VVV. But on that note, I think
what about Serve? I know Serve was another one that it's like, hey, this
Serve
might be a foundation. Is it a foundation model? But I mean, it had a pullback, nice bounce.
Yeah, it looks like it's kind of coming back down into that range.
Yeah.
We might do something similar. I don't know. They've just been making a lot of headlines recently, so it might cool off the headlines, but still has not confirmed. Tom from Serve, or is it Tim? Tim from Serve has not confirmed a booking, but yeah, I would love to answer all your questions, but I feel like just next week we can talk to Tim about it and hopefully get that fleshed out. But yeah, really cool stuff. Their model or API plugin is like allowing you to have a much faster and better, cheaper AI. And then also they have the launch pad. They're doing a few different things.
Pull open GSD.
Sure
This is
agreed.
Again,
Actually,
agreed on GSD. I think this looks like it's based for absolute ever. And this looks like a great looking chart. Oh my goodness.
Yeah. I mean,
it's got a lot of
right.
time in this range.
Based right forever, low selling volume while we were in this range. 60 days we've been down here. He's kind of flipped on the fee switch recently. We know this. And I think, the guy's, he's here to stay. Lex is here to stay. I think GSD just it's waiting for the market to heat up. And as soon as it does, GSD probably goes on a pretty nice run. Probably not a bad one to DCA, frankly.
Yeah.
It's one of the few.
I love GSD, love Lex, fan of the show, we're a fan of Lex, to be honest with you. And this is the other thing, like with these kind of builders is, look, I can't figure out the Claude code myself, but if I can make money off something like a GSD, owning a good chunk of that, then I've achieved. And he's like honestly one of the best builders. Like I just one night watched him and he live streams it. It's the thing is just building itself, and it's kind of like the self-fulfilling build engine. I really, really like this one.
Yep, slow grinding, just kind of sitting in this range, probably breaks out. No, this is one like I told you, I hold very few tokens right now. GSD is probably one I would just be pretty comfortable buying and sitting on for the sake of, if Bags comes back, GSD probably has a really nice run. And just like, what can Lex do with it at a 1.2 million valuation? He's tying revenue back to buybacks. He has a stake feature. He has like a revenue model he set up. You know, we're seeing these kind of products get picked up by big AI labs. And so, you know, call the token 1/10 of the value of what GSD is actually worth. I still think it's kind of cheaper. So I do like GSD. Yeah, I will float that to him, Crypto Jones. Float that to him. Yeah, so VVV, Serve and GSD there. And then I just saw Loria is kind of getting some bids as well. Again, just so opaque on whether Andy Ares is going to do anything with this.
Can we go to his account? I mean, wow, that looks beautiful. Like, these are the kind of charts, in my opinion, you want to start bidding at.
Yeah, it came down to this range. Very low volume, but it does start to get attention here. I mean, it's this one's all a big a big if. So Andy Ares.
Here, let me I can help out with a bit of this.
And I think the wise men are gearing up to release a full like Andy Ares Loria documentary breakdown, as they like to do. So that, I'm sure we'll get a lot more information from that if we want to. I don't know if they got in contact with Andy, but nothing new from the Upward Spiral account. Let's see. Where is Monsieur Andy? Following, obviously they're gonna follow him, right?
Yeah, I don't.
Oh, here he is. Okay, perfect. Anything from Andy? 12 hours ago, a bunch of Mac Minis.
That's like a huge stack.
Nothing, bro.
That's like $20,000 worth of
Mac
dude.
Minis?
That's the thing with Loria. That's the thing with Loria, bro, is I actually have no idea what Loria actually does. If you go to the website, it even is very opaque.
I'll tell you, Deep Fates, I believe, part of the here. Okay, here's what we can do. We can go to affiliates. I should have done this earlier. I have seen there was a third person affiliated.
There
with
was
this
Deep Fates. I'm pretty sure he was affiliated, but he's no longer affiliated.
Interesting. Yeah, TLDR on Loria, bro. Like, it's not even something we can tell you. I think it's an extension of the back rooms and kind of like working towards autonomous AI agent systems. Again, very opaque. Like, it's just a bet on Andy, I think, for the most part. Let's see if this guy's talking about it, though. Talking about war. Okay, of course. Nothing. I'm going to go to Deep Fates. Because I have a feeling he's tweeting more about it, ironically. Yeah, so I believe it's an extension of Backrooms, kind of like what Backrooms was always meant to be. Okay, some personal news. Today will be my last day at Upwards Earth. As of April 1st, I've gazed into the endless nights, and there are shapes out there. We must be kind to one another. I'm moving on to study philosophy. Whoa, Deepface has blocked me. What? Dude, I must have been doing that BD, bro. He was like,
oh, yo, you're doing that BD. We do it for you guys, by the way. We do it for you guys.
Oh, well, fuck him. Damn, dude. But I can still see his post, so that's all that matters. I'm like, why does this guy block me? Definitely because I probably commented on something like, hey, this is really cool. You should come on MCG. It's like, oh, shut up. Whatever, dude. Try to be tasteful here, but hey, if I would have snagged him on MCG, though, it would have been worth it, huh? Would have been worth it. And frankly,
yeah, I mean, again, Upward Spiral or whatever it is, no clue.
But all right, I actually do have to jump on a call, so ironically, I do have to run. But fuck, I missed the Loria segment. What did I miss? No, you didn't, bro. You didn't miss the Loria segment. I think I'm blocked because I was trying to get them on, and probably in like all of their comments, spamming them to get on. Spawn rejected. Okay, yeah, we can check out Spawn real quick.
Spawn, when you say messed around with it, have you put your own trading agent out? Because this is one that I have my eye on it, but I want it lower. I don't like buying it here. I have no position in it.
Yeah, look, fully in the camp that I'm convinced like agents will become better traders than humans very soon. Like probably, I mean, very, very soon as these algorithms pave out. Also very convinced that it has not worked at all in the past. And I've experimented with a lot of algorithms in the past. I've had people try to sell them to me. I know the only ones that work are the ones that are contracted to these institutions, and they are not allowed to sell. Like they're not allowed to sell them anywhere else. So, no cool experiments going on. One of them might pan out. I do happen to be a little more pessimistic.
What's the market cap? Yeah, 200K or something like that.
355.
350. So yeah, 55. Okay, got it.
Yeah, I mean, price action looks pretty good. Markets are just so bad. I would say you get down here, you get back into this range, that becomes like deep value territory. As long as the agents have become, consistently more profitable. I really like seeing how Bean was plus EV on their agents. That was nice to see here. We'll check out Bean lastly, and then I'm dipping. I can't wait to get back in the trenches though. Like, boys, I wish I could come on here and be like, I'm watching this, and this, and they're all alpha, and I could break it down for you right now in real time, but I'm just not there right now. Okay, Bean looking like shit. Sorry, bud.
No, that's all right. I did take profits on this though yesterday on that big spike up around $24.
Well, there you go. That's good timing. Good timing.
Yeah.
But I did like what Bean was doing. I like if it can stay plus EV, then like, the reinforcing flywheel works.
Yeah, though, I mean, look, this is a thing to look at. Bean is how much money's on the grid each round, and if that number is above 0.1 ETH, it's going to be good. If it's below 0.1 ETH, it's you got to keep an eye on it.
Sweet. And Josh, do we have another call later today, or is that not today?
Yeah, we do at 3 p.m. I think.
Okay, sweet. All right. Well, that's cool, Abe, to see that you tested out an agent. How did it do? Half a soul, test out an agent. Interested, curious to see how that's doing. We should be getting paid by Spawn also. Nonetheless, yeah, let me know how that's doing or how it's done for you. Cool to see that people are actually using it though. Like Chill spun up his own agent, Abe spun up his own agent, maybe others. So,
all right, boys, I got to do some liquid DD. See if this is worth holding or not.
Yeah, keep it short and sweet, guys. Don't touch grass. It's a nice market. Tomorrow we got some really, really interesting guests. It's actually going to be a super fun one. So tap into that. I'll definitely be tapping in from wherever I'm at tomorrow. That's for sure. All right. See you, boys.